Purple, yellow, red, fading, fading. Purple, yellow, red.
I had a war locked inside my head. I tied my shoes while still asleep. Felt so confused when I'd make amends.
You're listening to Chill Your Mind Radio.
Then someone said to me, you're gonna be great. Yeah, you're gonna be great. So we two raised our glasses up from that day, and we had a pity party. So cheers to the bad things we don't wanna have it. Now is the time to choose. So cheers to the bad things, let go, 'cause the night is turning around for good. And we'll keep on going. We'll keep on, we'll keep on, we'll keep on going. We'll keep on, we'll keep on, we'll keep on going. We'll keep on, we'll keep on, we'll keep on going. I used to feel like an underscore. Yeah, I would stay inside the line. I couldn't see what I saw before. Always to chase for every high. Then someone said to me, you're gonna be great. Yeah, you're gonna be great. So we two raised our glasses up from that day, and we had a pity party. So cheers to the bad things we don't wanna have it. Now is the time to choose. So cheers to the bad things, let go, 'cause the night is turning around for good. And we'll keep on going. We'll keep on, we'll keep on, we'll keep on going. We'll keep on, we'll keep on, we'll keep on going. We'll keep on, we'll keep on, we'll keep on going. We'll keep on going. We'll keep on, we'll keep on, we'll keep on going. We'll keep on, we'll keep on, we'll keep on going. We'll keep on, we'll keep on, we'll keep on going.
Somebody said they saw you. The person you were kissing wasn't me. I would never ask you, no. I just keep it to myself. I don't wanna know if you're playing me. Keep it on the low, 'cause my heart can't take it anymore. If you're creeping, please don't let it show. Oh, baby, I don't wanna. Think about it when I hold you. When looking in your eyes, I can't believe. I don't need to know the truth, no. Baby, keep it to yourself. I don't wanna know if you're playing me. Keep it on the low, 'cause my heart can't take it anymore. If you're creeping, please don't let it show. Oh, baby, I don't wanna know. Did she touch you better than me? Did she watch you fall asleep? Did you show her all the things that you used to do to me? If we're better off that way, baby, all I gotta say, if you're gonna do your thing, baby, don't come back to me. Baby, don't come back to me. No. 'Cause I don't wanna know if you're playing me. Keep it on the low, 'cause my heart can't take it anymore. If you're a creep, keep it on the low. Oh, baby, I don't wanna. Ooh.
For more music, check out our Spotify and YouTube playlists. Enjoy.
All the lows and all the highs. I miss it 'cause I'm addicted. Remember how it felt when we were holding hands in Tulum. The sun was on our backs, we were walking on the sand, me and you. Lately always wishing I can change the Don't worry, be happy. In every life we have some trouble, but when you worry, you make it double. Don't worry, be happy. Don't worry, be happy now.
What's going on, everybody? Let me swap this here. Can you guys hear me? Everyone good?
I could hear you.
Awesome, awesome. All right, we're gonna get started here, man. Let me put my volume up. Alrighty, sorry, I was just finishing up some dinner. My eyes are killing me. All right, man, let's get into this. So hopefully everyone had a good week. I was out of town last week, so I kind of had something else going on that I kind of didn't have a lot of time to trade. So I honestly only took 2 trades, and one of those trades was a gold trade that I damn near threw my laptop out the window. Yeah, it infuriated me because the trade, the idea was great, the setup was great, the execution from my analysis was perfect, but my broker screwed me out by 1 pipette. So, and it just so happened that on Friday, I was where I was at, I couldn't have a cell phone. And by the time I got to my cell phone, it was like 3:00. So yeah, I was infuriated. And just to give you guys an idea here, hold on, I think I shared it, but where the heck is it? Dude, it damn, oh, come on, that's stupid. I got to get, I'm in the process of shopping for a new computer because the iMac I'm running right now, the 16 gig RAM, man, it's not keeping up with everything I got going on. So I'm looking at getting that iMac Pro. All right, where is it? All right, so we'll get into it. I'll find it later and I'll show you what the culprit for my almost broken MacBook Pro. All right, so let's get into it. So starting off the week, man, hopefully everyone's already looked at it, but it's NFP week. Going into this week, I already had the mindset that I'm going to be very, very selective, and I'm going to be not overly cautious, but I'm going to be overly conservative in not breaking any of my rules. So, and I'm going to go over a trade today on GU that I was looking at taking, and it had 3 out of my 4 confirmations. And because it didn't have my 4th, I didn't take it, ended up saving me a stop loss. And then I'm going to go over my CJ trade, which definitely infuriated me because it broke even, but we'll get into it. It's honestly a pretty quiet week other than some Australian stuff, which the cash rate tonight and stuff like that. I mean, all this is going to stay the same. I don't envision any really big market moving news events coming out until Friday, so I expect that we are going to probably start just kind of moving sideways, even though today we had some pretty good movement. But I do envision us kind of just moving sideways until we get into Friday, so that's going to open up the door for, some intraday moves. All right. For everybody that's really started to look at some, Wyckoff schematics and incorporate that into your, into your trading plans. Hopefully you guys are really paying attention on the higher timeframes, what's going on, especially with the US dollar. I've got an alert set. I really haven't been following it much. One of the things I really told myself I was going to do was not sit at my computer and just stare at the market, right? And it's actually helped. My now that my back is better, I'm actually hitting the gym and doing some running and stuff. So I was gone most of the morning, and then the afternoon was some pool time. So I definitely enjoyed it. But let's kind of we have our, obviously it's NFP week. We know what's going to really happen. Australian dollar, again, I don't see much going on. GDP is coming out for it. The the numbers are going to be negative, so I don't see a huge movement, other than what's going to happen on Friday. All right, so let's get into it. All right, one of the things I want to talk about. Let's go to DXY. All right. So dollar index, right? Let's just go to the higher time frame, right? And everyone, I know I shared this in the group, okay? But we have a really nice setup, coming through. We have our, agenda that they're pushing, okay? It's a clear accumulation schematic. The one thing I am waiting for to pull the trigger on certain pairs, right, is, and I've got my alert right here for a break of structure. I need this structure to get broken here, okay? It might have happened on the smaller time frame, maybe only 1 hour, but I really want this, not even on the one. Well, yeah, I want that 4 hour to really show that we are going to break, and then just follow through with the schematic. Okay. And, am I saying that this is the bottom and the dollar is going to get back up to the 100? No. For this schematic to, ultimately be suffice, it's just going to come up to the trading range, right? And then break out of the trading range. So, ideally, potentially something in here, or up into this range up here. Okay. And then we're going to see some more dollar fall, right? But, the dollar, if you look at the weekly, man, the dollar has just been just, I mean, I don't remember the last time. I mean, never in my trading career have I seen this happen. Okay. So there's definitely an agenda. All right. And if you guys are keeping up with what's going on, um, with the Federal Reserve and the gold standard and everything, it makes sense as to why the dollar is crumbling, right? It makes sense why there's a manipulation on the dollar index to push it lower, ultimately giving rise to that, to that gold standard coming back. So, but I'm not going to get into too much into it. All right. Just trade what you see. So right now, what do I see? I see a beautiful accumulation schematic, right? Ultimately, sellers came in, showed a little buying pressure here for preliminary support, right? We had a selling's climax. We created our trading range, right, between our automatic reaction, and our secondary test. We just traded within this range. We broke out into a secondary test in phase B, right? Typically, I've been noticing that when you get a phase B secondary test or an up thrust, right, that it comes up and trades to the top or the bottom end of the trading range, right? Obviously, this didn't go all the way up as I would have liked. And then we got our spring, right? I was looking for it this morning. We finally broke these lows, took the spring, and now it's just a matter of just patience, right? I want to see us, potentially will this come back and then break up above and then create a test to take it higher. I'm not trading the dollar index, so I could care less how it looks and the way it's going to trade it. I just want to see a clear break of structure. I want to see us with that sign of strength, come back, mitigate out, and then, attack these equal highs up here. Okay. That's really all I'm looking for. All right. All right. We'll move that over there. Bear with me here a second. Let me just organize this a little better. All right, there we go. Okay. So with that in mind, I am going to be looking overall, if we get this break of structure, I'm going to be looking for some sells. EU is one of the ones I'm really looking for. And, I've kind of been looking at it, to start the week off and whatnot. One of the trades I'm still in, I'll kind of go over this briefly, right? Like, let's go over Euro GBP. And I think I jumped into this like yesterday afternoon. What time was it at? Oh no, it was yesterday morning. Yeah, it was yesterday morning, right? Yeah, yesterday morning I jumped into it. It's actually one of the only trades I took yesterday. And the reasoning behind it, right? Let's just break it down, right? The reasoning behind it was just a clear agenda. All right, we had definitely some resistance here, right? Equal highs, definitely some liquidity being um, fashioned. Okay, um, and the agenda was pretty clear, right? Oh, for the love, the agenda was pretty clear. We got this run up to grab liquidity. We reacted off of this area right here, and then it just melted. Right, it just melted. So ultimately, what I was looking for, what I was looking for, and I think it took it off the 1 hour. Yeah, took it off the 1 hour. So I just took 50% of this 1 hour candle right here. There's different time frames you could have played it off of, but I went off the nice, the nice round number 86.65. My stop loss was just above this wick, so it was a 10 pip stop loss, and I took my first. Oh, for the love, come on! I took my first partials. Um, there we go. I took my first partials when we broke 8,900. All right. Once we broke 8,900, and if you look at it from a higher time frame, right, it's just been beautiful structure, right? I mean, we've got, our high, our low, our high, our low, our high, our low, our high, our low. All right. So structure wise, it's just making lower lows and lower highs. So why not just play with it? Let it go. So I closed half of my position at 8,900. It was a nice little grab, like 3% is what I closed out on. Um, what I personally am trying to see if I can get is I want to see if we can one break below these lows right here. And then I really want to start attacking down here. All right. This may be the move. I don't know. This may be the move that takes us down. If it is, I want to be in the party. So that's why I'm leaving a little bit of my percent of my trade on. I'm still leaving 50% of it on. Okay. One of the things I'm looking at is potentially, because we now made a new low, is potentially coming into this 4 hour candle. I'm not 100% set on it just because all the other time frames. I mean, it's not real. There's not a real clear reason why it needs to come in there. You could see price when price came in here, kind of just sputtered around for about an hour and then dropped. All right. So I'm not, I'm not 100% sure it's going to come up there. All right. But I'm going to dive into it once I start seeing the pullback. It may not even pull back. We may get a little sputter and then just keep going. So, if it does, I'll look at it again. I've got an alert set up here. If we do break above it, I'm going to start looking to see where I want to take an entry. All right. Um, so let me get into the two trades I took today. Right. So GU, and just to kind of give you guys an idea, right? So GU, higher time frame, right? We are bullish all day long. This I've got it marked off. This is the 2019 high, right? So that's going to be my overall target when we do, need to go for a bullish, another bullish run. All right. But one of the things I was looking at on GU, let me just pull it up here, right? I was looking to buy it down here, and I just happened to miss it. It is what it is. But if you look at it, let's get into the 15-minute time frame, right? This was just a simple setup on the 15-minute back here on Monday. All right. So on Monday, when price broke above, right here on the 5-minute, there we go. All right. So when price on the 5-minute, and you can see, right, we were just bearish, bearish, bearish. Then we started to build some higher highs and higher lows on the 5-minute time frame. So we came down, right? We broke below, we took this low, right? So people would be thinking that this is a break of structure and, it's coming down, right? So when we did this, when we broke above and broke this 5-minute structure here, it was a pretty easy play, right? Came into this candle right here. This was a 3.5 pip stop loss. All right. And, depending on where you wanted to take it to, you know, I had in what I was looking for was like 134.65. It ultimately got up there. I didn't take this trade, right? I saw it. This happened at 9:45 in the morning. I had, actually, I think Victor's on the call. it like happened too quick. Like this, it came in, and by the time I saw it, price was already here, and it just sucks. It's one of those, I was looking at EU instead of this. All right. But it was, again, this, I still marked it up. I still, added it in because I wanted to follow how this actually worked out and played out, so it did do exactly what it needed to do. All right. And then I was looking for another entry because here we have equal lows, right? Liquidity, 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 and boom, we got a run on liquidity here, right? So what I wanted to see, and I think this is off the 15-minute, I wanted to get an entry. All right, 30-minute, that's what it was. I wanted to get an entry here, right? And you could see I had my stupid order sitting there. And it was a clear play, right? Why am I looking at this? Because this is the candle that grabbed liquidity. This was the previous low, right? We expanded. I wanted to see price come up and then retest or close out of this sell, right? This sell to buy, and then we go up. And I don't even want to know how many pips that missed by, but it wasn't much. 1.7 pips, right? So it was a 12 pip stop loss, so it is what it is, overall, I do see this coming further down. I'm looking at this area down here, right, as an area that I'd be interested in looking to see if we're going to react off of, right? But what I really want to show you is the trade that I was looking to take earlier, right? So let me go down to the 1 minute, right? I want to go down to this 1 minute, and I'm going to show you what I was looking at. All right, so here's the accumulation that I saw. All right, and this is just simply a failed accumulation. All right, price came down. We created preliminary support, right? Buyers got into the market. Price came back down, sell into our selling climax, right? And we began to range, right? We created our trading range, created a secondary test in phase B, showed signs of strength by breaking out of the trading range, right? Came back down and created a spring, right? We created a spring in here. And all I wanted to see is I wanted to see us break above this previous high right here. Had we broken above this previous high, I would have taken this trade all day long up. I was waiting on it. I had my alert set, but we just never did, right? And you could just see we continued to melt down. So for me, this was a no trade, right? It didn't break my structure. It didn't give me that fourth confirmation that I wanted to get into, right? Higher time frame, this is bullish. Medium time frame, we were bullish. Just intraday, we started to show some bearish signs by taking some lows. But at the end of the day, I was looking for this schematic to play out. It didn't. No trade, right? No
Hey,
trade.
Mike.
Yeah, go ahead.
Hey, can you go over your 4 confirmations that you go through? So I get the Wyckoff schematic and the break of structure. What are the other 2 confirmations that you were waiting for besides the?
So the main one is it has to line up with a higher time frame, right? So, and you know what? I'll really be able to explain it, so you guys have a clearer picture on CAD JPY. I'm going to do that one next, but so it has to line up with what is going on the higher time frame. Okay, so higher time frame, what are we in a schematic? Is it, do we have something that I need to play off of, right? And if that's the case, just here, I'll just show you on Euro GBP, right? So, I'm sorry, Euro USD. So on Euro USD, right? And this is how my confirmation goes. Let me go to, hold on. Let me go to this chart because I did it a little more cleaner on this chart. All right, so Euro GBP, just like obviously it's the inverse of dollar index, right? So we are in distribution. All right, we are in distribution. So on the 4-hour time frame, we have distribution. All right. So when I get down to the intraday move, what am I looking for? Right. So I am looking for a price to come up and retest our up thrust after distribution. Right. So I'm looking for something in here for us to get into. All right. Now, one of my confirmations would be, all right, so if I'm looking for a buy, right, and I'm looking for a buy in this area here, we have some equal lows. I want to see us come down, which would be a break of structure on dollar index. And if you do this the opposite, right? Like if I just show you this like this and I inverse it, it'll be the dollar index, right? So there it is, right? So this is the exact what the dollar index looks like, okay? So if we get that break of structure where I have the dollar index, all right, and then come back down, that's exactly what I'm looking for to happen on Euro USD. All right. But now I'm going to trade it off the smaller time frame. So that's confirmation number one. Confirmation number two is, does it line up with an agenda, right? Is there an institutional candle? Does it cover in balance? Pretty much my smart money concepts would be confirmation number two. Number three is there a schematic in play, right? Are we in distribution, accumulation? Is there a redistribution or reaccumulation going on? And then my final confirmation is it time of day. All right. I've really started to pay attention on when certain pairs make a move, right? Doesn't mean I'm not going to trade it, if it happens during an off time. But I'll tell you right now, like if I'm looking for a US dollar, like Euro USD or GU, I'm not looking for the move to happen right now, right? I'm looking for it to happen London or New York session, and that's it. If I'm looking for an entry, if I'm not already in an entry prior to New York Open, I'll be looking for an entry close to that London closure. And that's just based off of like all my back testing, all my journaling, understanding where the market tends to move. And one of the things that one of the things, hold on, let me see what just happened. One of the things that I've really been paying attention to, and I credit Victor for putting me onto it, is understanding like these traps that are being set, right? Understanding, all right, if they're going to induce buyers or sellers, when are they going to do it? Okay. So those are ultimately my confirmations, right? And going back to GU, again, this I said it this morning when I was messaging Victor, right? We were like, yeah, man, this might be the week's trade right here, because we can probably get it on a fantastic ROI, but we just didn't get the break of structure, right? We didn't get the break of structure. Now the other trade that we were looking to take, right? The other trade that we were looking to take is right here, right? This is CAD JPY. So let me give you the top down on it, right? So on the 4 hour, right? On the 4 hour, we were, going back to the middle of June, right? This was reaccumulation. All right. So this entire range, and actually up into here, okay, this was all reaccumulation. All right. Ended up catching a buy somewhere in here, and we took it up. All right. So we were in reaccumulation on the higher time frame. And when you come to the 1 hour, all right, when you come to the 1 hour, we are in, what it looks like right now in a potential, reaccumulation here. Okay. And then when you get to the smaller time frames, it's distribution. Okay. We were in distribution. All right. We got the up thrust. And the reason I was trying to play this up was to get a UTAD, right? Now, it doesn't mean that we're always going to get an up thrust after distribution. Okay. We could just come up into a LPSY, right? And you'll see it sometimes where it doesn't create that UTAD, doesn't give that spring, but it'll come into in this case, it would be a supply point, right? And then sell off, because ultimately CJ on the higher time frame is bullish, right? And I acknowledge that, right? On my 1 hour and on the, I'm looking for a run up, right? I want to see, and if you look at the 1 hour, I've got this highlighted. I want to see us come into this area right here to mitigate this imbalance. And once we get closer, I'll be looking for a buy in this area. It could be anywhere between this range, but I'm looking for a buy to take this even higher. Okay. But understanding that there's different schematics at play, you can trade it, especially, if you're not on a US broker, and you can start hedging positions. I can tell you there's been a couple times where I'll be in a buy and a sell just off of different time frames and still make a huge percentage off of both. Okay. So now let's kind of get into it, right? What we were trading this morning, the idea was this: I wanted to take this higher, potentially up into this upper end of the trading range. Okay. To either, hold on to it to see if we're going to get an up thrust, or if, to catch the sell back down. All right. So now this is what we were looking at. It was a pretty clean schematic, right? We had a accumulation schematic. We had our secondary tests. This ended up coming up secondary test in phase B. Originally, I thought this may have been our spring. but you can see that it, ultimately, what did it do? It just created a ton of liquidity being up here. Okay. And then we got our spring. So once we got our spring and we had this evidence of strength, right? Let me pull it up here for you. We had this evidence of strength. Okay. The play was pretty easy. We're on the 1 minute time frame, right? So everything is pretty evenly traded, right? There's no price inefficiency here until you get to this candle here, right? That's where you have your imbalance. So the play for me was pretty easy. All right. This was, now I could have shrinked it down. I could have put potentially the stop loss right there. That would have been a 2-pip stop loss, but for me, I went to 2.8. I just went to the bottom of this in case we got a little longer of a candle. And ultimately that was where the entry was, got the signs of strength. We broke this high, came in. All right. And this is one of the things I talked about that I got from Mike Navarrete, was price only needs to go a certain distance to mitigate out of that order. Okay. And in this case, we saw the evidence, right? Price only went 7.5 pips, right? Price only went 7.5 pips, but I was only running a 2.5 pip stop loss. Okay. So, I mean, at one point now I only did 0.25% risk on this. But at one point it was almost a 3-to-1 off of 7 pips. All right. And the reaction we got was phenomenal. All right. It just happened, that, I would have loved to have broken this high, right? Had we broken that high, I think at the very least we would have gone and broken above the trading range. Okay. Now, does that mean it's not going to happen? No. I mean, the current price action right now is, well, current price action right now is nothing. I don't really want to touch it yet, but I still believe that we are going to go higher, right? I still believe we are going to go higher. We did break below these lows here. And at this point, I'm just going to wait and see. I'll wake up in the morning and I'll see how price is reacting, where it's at, and the price action it's giving us. Because by then, heck, we might be up here, and I may be looking to sell it down. All right, but ultimately, I know I didn't take the loss on it just because I moved to break even as soon as I got to like 2-to-1, right? So I would say about 6 pips in profit. Once price got into here, and especially this one candle, I went to break even. So it ultimately just ended up taking me out at break even, but it sucked because this had a lot of potential, right? This had a lot of potential. So that was CJ. Those are the 2 trades I took today. Ended up, or I'm sorry, the 2 trades I was looking at today. CJ ended up breaking even. GU, really nothing. Just a recap from that gold trade last week. It was a pretty nice, a very, really, okay. It was a really, really nice setup, accumulation. Price came perfectly into here. I believe this may have been, I don't really remember what the setup was. Let me see, maybe it was a 15-minute. No, I think it was just 30-minute. But anyway, we caught this test right here. I ended up taking a little higher entry. I had split the entries, right? I went off the top of this 15, and then I think what I did was off the 5-minute, because the 5-minute came to right here, right? And ultimately my take profit was the top of this wick right here. So you can see we definitely got that. I'm still bullish on gold. Obviously I'm not going to buy it here, right? I just want to see if we are going to get a little bit of a pullback, especially with that dollar index going bullish. We do have some imbalance in here. And then if you look, yeah, absolutely, Victor, bro. Yeah, Victor said gold's going to 3K. It is, but when I have this highlighted, because if you look on I think it's the 1 minute or maybe the 5-minute, let's see. Yeah, so let's go to the 5-minute. I think the 5-minute might be a little better. What's that? Hold on. It's a 10-minute. Yeah, maybe the 10-minute. Yeah, maybe the 10-minute. But you could see, right? What do we have here, right? We had some liquidity being built, and then that FU candle. So this is the last, right? This is the last point before price just shot out of a cannon, right? So I want to see if we are, and the only reason it's not clean to me is because you can see like 50% of this candle, you can see these wicks. I mean, this is pretty damn close to 50%. So, I know I was looking at it the other day, and honestly, for me, it's just, there's no clean entry, right? There's nothing on every time frame I've checked. There is nothing that I have found that gives me any reason why price has to come back here, right? Other than the fact that this is where the last down candle, right? That last scoop of liquidity before it just shot out. It was on a freaking SpaceX rocket going to the moon. Um, so I'm just curious, but for the schematic to play out, right, it needs to retest a level of previous supply, right? Um, so you can see where our selling climax and our secondary test, there was a lot of orders, right? This area in here, and this is where like zones, like people that trade zones, this is where zones come into play, because this is where order flow, these are where buyers test the market to see if there's enough order flow for a price to get into, right? To take it higher. So, just looking from a supply and demand standpoint, I'm sorry, there's a demand zone, not a supply zone, but this is a demand zone. I want to see price come back down here, right? Earlier this morning, there was a pretty decent 1 minute entry. Victor, was it 1 minute or was it the 3 minute? I think it was off this candle right here. Yeah, that's what it was.
The gold entry this morning.
Yeah.
I think it was off. I had it off 1 minute.
Yeah. Yep. It's right here. It's this entry right here. So you can see, like, I mean, heck, we'll just go to a 3. I think you could see it on the 3 minute too. Yeah, you can see it on the 3 minute. So ultimately, what do we have, right? We had our selling climax. I'm sorry, our buying climax, right? Automatic reaction, right? Tested the secondary test, had that sign of weakness here, right? You could see we broke below that automatic reaction. Price came up, created an up thrust, and then a UTAD, right? And then ultimately the entry off of this UTAD, if you just wanted to go 50% off of that candle, right? The agenda was there, right? You could see the equal highs, price popped up, mitigated out of this candle on the 50%. It just, honestly, we didn't take it just because we saw it too late. I think we were looking at gold for a second, and then we went to the 1 minute, and then you were like, oh crap, look at this, but that was only a 14 pip stop loss, and realistically, if you just took it to maybe like this candle right in there, I mean, that would have been a 15 to 1. But we should have been looking for it just because it was at these highs that we anticipated that it did need to come down, but on the 1 minute, this is where it was at. These smaller time frames, I'll tell you right now, the smaller time frames are where it's at, where you can really crunch your stop loss, and you can be in a trade for less than an hour and catch a huge percentage. So ultimately I do want to see one other thing real quick. So before I get into some other setups, does the smaller time frame in this setup work on US 30? Absolutely. Now, so like US 30, right? Here's US 30. So US 30 is pretty easy. It really irritated me. It ticked me off because it never came back to retest. But if you look at like the 30, let's look at the 30 minute, right? 30 minutes pretty easy. Accumulation all day long, right? It did spring, right? Secondary test in phase B. We got remember I said after a secondary test in B or up thrust, it's going to always go and test the trading range, right? It's testing supply and demand. So that's ultimately what it did, came back, made the spring. And ultimately I was looking right after market opened. What time was this at? 9:30. Yeah. I think it was off the 3 minute that I was looking though. Yeah, it was off the 3 minute. So I was looking right here for an entry this morning. Yeah, there it is right there. That's the entry I was looking for this morning. All right. We got the spring. And then as soon as we broke, you can see my structure, right? We broke structure. All right. And then I wanted this to come down, mitigate out of this imbalance, and then come into this candle, right? I had an order pending right here at 50% of it. It was going to be a 21-point stop loss. But I would have been willing to market execute at the open if I saw it, getting ready to go. So I had an alert here. It didn't do it, you know, it doesn't happen often that it doesn't test out, but it is what it is, so you're always looking for a break of structure. I mean, that's up to you. So me personally, Bonnie, yeah, like if I don't get the break of structure, I don't take the trade, right? Just because, all the losses that I would have taken or I have taken could have been avoided by waiting for the it's whatever time frame that I'm looking to enter off of, so in this case I was looking to enter off of this 3-minute candle, so I need that 3-minute break of structure, you know um it really, in this case, it really didn't matter because the structure was the same. You could see this key area here on the 15 or on the, I think it might have been on the 30 was the same. So I just needed it to break, and it never did, right? So, and then this is where it just comes back to, is it worth it? So like for me, you know if let's just say hypothetically, all right, let's just say hypothetically, right, it would have come back to this 1-hour candle, right? Which it almost did right here. Okay. For me, it just wasn't worth the trade, because if I would have taken it off the open of that candle and had to cover this wick, right? Because there's still some inefficiency down there. I mean, that's a 126-point stop loss. I will never take a 126-point stop loss on US 30. For me, it's just, I'd rather just not take the trade and wait till tomorrow or another time. Right. But it was pretty clear, S&P, pretty much the same thing. I was looking now, S&P really pissed me off because you can see right here, here's the 9:30, or I'm sorry, here is, what was this? This was 6 p.m. yesterday, right? We got this this liquidity grab. It took this low and this low, all right? And then shot up, broke above the structure, right? So for me, this was an easy trade. And again, right, you could see low, this grabbed liquidity. And then when we broke above this, right, break of structure. All right. So I was taking 50% of this candle right here that ultimately is the one that had all the volume in it. And that was my entry, right? So this happened at 9:45 in the morning. Missed my order my order was at 3492.6 and it went to 94.2. So less than 2 points, it missed my order, and I was simply just going to take it to these highs right here. That's what I was looking at. But it never came back, it never tested it. So, it is what it is. I didn't trade any of the indices today just because I didn't get the entry that I wanted, in this case here, this was a 3.5 pip, or I'm sorry, a 3.5 point stop loss, so, again, one of the things I've really started to look at is less trades, right? I'll just wait for the right trade. If I don't get in, I don't get in. Had I gotten into this trade, I mean, I would have been up, almost a 10-1, so that honestly, especially depending on what kind of account you're trading, it's, it kept ending up going the wrong way because of listening, obviously not hearing. Yeah. And I've said it a couple times, I know I wish I would have known about, like funded trader programs when I started, first building my account. But, you get the technique down, you get the trading down, you get your trading plan, and then you apply to one of these these brokerage firms, and, you can trade 100K capital, where if you make 10% a week, you're taking home 7K a week, and 10% is nothing. All right. On one of the, funded brokers that I did one trade, I qualified with one trade. I only needed 10%, and I got a 1 to 22, and I risked 0.5%. So I got my 10%, and I just did 0.01 lots for the next 9 days because I had to trade it for 10 days. But that's how I qualified for the qualification period on it. So don't get don't get too crazy on like over trading. You know, if it's not there, don't take it. You know, I'll tell you right now, there's some days I just don't trade because everything I'm looking at just isn't worth it. You know, I'm not gonna trade a 3-to-1. You know, for me, that's not worth the risk anymore. All right, but I kind of just wanted to show you guys that. And I kind of get into what I'm personally looking at, right? So EU, right? EU is honestly my favorite setup right now because of what the dollar is doing. Okay, so now this is, you know, I've got an alert set here, okay, and I've got an alert set on DXY. If DXY breaks structure, which I want it to do, right? Don't pay attention to this because I'm really not. This is one of those like maybe I'll take it, maybe I won't, but it's not a very high probability trade because it's sitting at equal lows, right? It's sitting at equal lows. You know, it may come down to me deciding is it worth the risk, and if I take it, maybe I'm only going to do 0.25%. But what I'm really looking at is this candle right here on the 15-minute. Okay, that candle open at the 15-minute. If price breaks structure on DXY, it would break this right here on Euro USD. All right. So I'd be willing to take some risk depending on time of day, right? I want this to happen during London session, that London crossover time, you know, like 5 a.m., 6 a.m. It's, you know, pretty easy. Risk is just below the wick. It's 11 pips. And I will be taking it personally up to these equal highs right here. All right. And you can see the equal highs like on the 1 minute, those equal highs, right? That's where I'm taking it to. Right around, you know, like 1.95, right? Nice little round number. That's what I'll be taking it to. So if that plays out, right? If that plays out, you know, it's a nice, what is that, like 7.5? Yeah, well, it's 7.5 to 1. Okay. So that's what I'm looking for on the buy side. All right. Now, if that happens, right? If that happens, I'm going to take the buy up, and then I'm going to personally start to set up for the sell, right? So one of the areas I'm looking at is this candle right here. Okay. You could see it off the 15. We got some imbalance here on the smaller time frame. We have equal highs. And if you get down to the 1 minute, right? If you get down to the 1 minute, and this one here, I personally will not put an order limit for. Okay. And the reason I'm not is because we have equal highs, right? Ultimately there's liquidity here, but this is that last up candle before price just melted, you know. So my first area I'm going to be looking at is this candle right here. And it is, I think it's a 4.5 pip stop loss. Okay. And I have every intention on holding this to the lower end of the trading range. Okay. The lower end of the trading range. And for me, where I would be taking it to would ultimately be, you know, down into this region right here. Potentially, you know, these are my targets right here. So if that's the case, I'll be looking to take it there. You know, you could see that 47.5 to 1, right? That may be my month trade if that happens. Okay. Now, if that doesn't happen, I will be putting an order limit off of this 30-minute. You can see this candle right here. It's the 15-minute, the 30-minute, right? I'll be looking to take that. That's a little bigger of a stop loss, right? 22.6. I may just put a sell limit here. And if I go to sleep, I don't want to miss this trade, right? Because price should not go above this wick, right? This is one of those where I'll just get into the trade to get into it. You know, and the reason is because the risk to reward is still worth it. You know, if I take this down to these equal lows, I mean, that's still a 10 to 1. Okay. So that's my thought process behind it, right? That's why I'm looking to take it that way. Now, if I wake up tomorrow at New York session, and you know, I'm in the buy taking it up, and I take my profits here, and I notice that we are on the smaller time frame, like maybe like the 1 or 2 minute, we're starting to show distribution in here, right? Then I will just go through my normal distribution selling opportunity, wait to crunch that stop loss and see if I can get into a stop loss up in this area off of 3 or 4 pips, you know. So that's how I'm going to play it. All right. So I'll send this to you guys like this, right? You know, hopefully with, you know, what I've explained, it makes sense. But EU for me is a huge a huge play just because of what the dollar index is doing right now, right? And the fact that the dollar index is showing that bottom, right? Are you expecting to buy first, then the sell? Yeah, ideally that's what I want to see, right? I want to see before we come back up. I would like to see that liquidity grab here. Ideally I'd like to see it because then I can buy it up to sell it down. If the buy doesn't happen and we come up here, then this buy idea is completely gone. I'm not even looking at it. We may get a little bounce when we get down there, but it's not worth me taking the risk on. Okay, not worth me taking the risk on. So that's EU, right? GU, right? So GU, I was potentially looking here. Okay. I personally, though, would like to see what happens when we get down here, just because the fact that we've kind of come down and moved away, on some time frame, maybe the 45-minute, let's see. On some time frame, we potentially mitigate just because of the reaction we got, right? We got a bounce. Yeah, it's right off here. So that's the candle. We came off of this 5-minute candle right here. So it gave us that bounce, right? A retest of it, and then it came up. So I honestly don't even want to look at this setup anymore. I want to see what happens when we get down into this lower range, because I think we will, right? I think we will. And we're a ways from there. So I'm going to be looking for that tomorrow, to see if we get a bounce on it. Now, the other trade I'm looking at, and I'll show you this right here, is UJ, and I'm already in this trade, I guess, because it activated. So give me a sec. Let me see if I need to go to break even. Again, I typically don't like to trade during this time. The only reason I did this was because it is a yen pair during Asian session, right? So for me, I'm looking for sells, right? I'm looking for sells on UJ, okay? But I want to see us get up into this area here. I want to see us get into this imbalance to sell it. If you look at the higher time frame, we're just in a range, right? So I've marked off our trading range high and our trading range low. And ideally, because we've, right, low, high, low, high, low, high, and then we broke all these lows on the higher time frame, I want to see a pullback and then a continuation down, right? That's what ideally I'd like to see, potentially into this 4-hour candle, right? That's potentially what I'd like to see. I was looking, I don't know if it's still there. Let me see. I don't think it is. I was looking for an opportunity to sell it. No, I'm sorry, to buy it. What was I looking at? Let's see. Yeah, so you could see, like, I had this marked up earlier, when we were here, and it didn't give it to me, right? So, like, one of the things I like to do is I box it out. I start drawing my nomenclature, right? And if it doesn't happen, all right, no big deal. I didn't get into the trade, but I did want to see us get into here so I can take it up potentially into this area up here, right? I'm sorry, into that area up there. But I'm going to be looking for sells up in here. I honestly may just go to break even right now because I'm like 10 pips in profit. But this is the reaction I like to see, right? I like to see us mitigate out, and then, hold on, bear with me one second. Let me do this real quick before I forget. Yeah. Yeah, that is a beautiful reaction. Okay. And ideally, what I want to see, I'm just going to put an alert right here because I want to see us. I want to see us break above this high. Okay. Well, it's nice that this happened already. I was looking for it to do it, but it is what it is. No big deal. Let me see what else we're looking at. Well, you know what, Mike, you're on the call, right? You want to go over AJ? I know you were looking at AJ. Oh, no, Mike. All right. So real quick, what's the best time frame? 5 or the 5 minute or the 1 minute? Let's see. Right now, the 3 minute. Okay. So what do you mean you have no mic, man? Come on. All right. So on the 3 minute, right? On the 3 minute, man, though, this is just ranging though, you know. You got your trainee with you. Sounds good. All right. I'll tell you what, Mike, the only thing, man, that I don't like about AJ is that we are, hold on, right? So we have trading range there, and then ultimately like a trading range up here. Yeah, you made your 5% on it. Yeah, no, yeah, it looks like it keeps trying. Well, here, Mike, let me see. Yeah, there's your chart. So Mike sent this to me this morning. Honestly, the only reason I didn't take it, yeah, I mean it's multiple distributions, right? But let's break it down like this. So right here was the latest distribution that this morning happened, right? And I think you were at what, on the 32nd? I think he was like on the 32nd time frame off of this entry right here, 15-second. There you go. Yeah. But a clear up thrust after distribution, right? Took out the highs, came down, tested out of this candle right here. Here, let me annotate it. Bam. Yeah. So, right, we got our UTAD right here. This candle right here is the one that got tested out. I don't even know what was the stop loss, like 2 pips? Let me hold on. Let's see. 4 pips. All right. Yeah. So it was a 4 pip stop. 4 pip stop. And you can see clear once this happened right here. Right here. Once this happened, we broke that structure. Beautiful looking. So right now it created a LPSY right here. Right. So what it's doing, again, this is testing the supply zone. Okay. So, and obviously it's working because you can see the minute it comes up into this zone right here, sellers get back in the market. That's what you want to see. You want to see that flood of selling orders coming in. We did create equal lows, right? So there's a perfect agenda. Price is now continuing to range. So you can see we've got some imbalance in here. He's looking, this is what, the 3 minutes. So this is what, a 1 minute candle right here. A 3 minute. Yeah. So this is the 3 minute candle right here. Okay. So I guess what he's looking at is taking it off 50%. Right. And you can see that right there is about like a 1.2 stop loss, a 1.2 pip. So with AJ, I know AJ's got some small spreads. It's under a pip or right around a pip. So my first targets would be right down here. You know, that would be my first targets. And then continue it lower. Right, continuing lower. It definitely it's looking like it's trying to it's looking like it's trying to distribute.
But I think it's an accumulation though.
Well, so
look, yeah.
Hold on. This is why, and I kind of agree with you. That's why I honestly didn't take the I really didn't take the trade. This area right here, right? So it looks like one of those, like the reaccumulation schematic, like number 4s, where you get that impulse, it comes back, right? So, you know, you can even consider, like, if we just break this into phases, right? This right here, the fact that, well, hold on, let me clear it out. Hold on. Let's see. Okay. Well, honestly, Victor, I think it looks like it doesn't know what it wants to do yet. I think personally, if it goes up and creates and takes out that liquidity and then comes down to do the shakeout, right? I think, yeah, wait for that, wait for it to jump the creek, right? Breakout, test, entries here, and we take it up, you know?
Just they're trapping buyers, David.
Oh, yeah, yeah. Absolutely. Absolutely. Yeah.
It's they're gonna shake. There's a lot of liquidity that's being built up here. And look, if you look on the higher time frame, price doesn't really have a lot of resistance to continue going up, and up is where it wants to go. Look, you're gonna have to go like on the daily and then have a look
Yeah.
at what the daily candles look like previously, because there are targets.
Yeah.
And this is very bullish. This is very bullish.
No, it is. It is. No, I mean, I agree. I agree. It's, I mean, just going off of the daily, I mean, you can see the imbalance just sitting right up in here, and then, yeah, I mean, that would just, I mean, that there is, 150 pips right there, but no, I agree. I mean, this is the trap. They are setting a trap, I mean, Mike, you grabbed your, you grabbed your percentage, which is, great. Like that's what I said. I mean, if you're going to play it off of this candle in here, and it does that, my targets, right? My targets are this right here, because I definitely think that they are going to shake it out, right? I think they're going to come down, and create that shakeout, almost like a spring, and they're going to take all this liquidity out, right? They're going to break out, and the buy is going to be off that retest. Check the 1 hour. Let's see. What am I looking on the 1 hour?
Yeah, it's a reaccumulation, right? So like it wants to come into those candles right now, like that 1 hour doji.
Yeah.
Right to the bottom, like that's where it wants to come and potentially shake the buyers to test out of this 1 hour doji, or not test, but yeah, that one right there, that imbalance.
Okay. Yeah. I mean, you're good with that, Mike. Here's the only thing you have to pay attention to or watch out for. So on a reaccumulation, right? On reaccumulation, I've noticed that it always, so when you have a trading range, right? When you have, when we have this, right? We have liquidity up here and we have liquidity here, right? So if it's going to start to reaccumulate, what it's first going to try, what I've seen, what it likes to do is it's going to pop. Oh, hold on. It's going to pop up, right? We're going to get that pop up. We're going to get a UTAD, right? We're going to get a UTAD right here. And then what it's going to do is this. It's going to be a nice slow channel drop to do a shakeout. So we're going to get this, right? And then it shakes out, let's just say potentially all the way into here, okay? Shakes out, mitigates out of this, and then we're going to get this. We're going to get it's going to jump the creek, and it's going to retest into a demand zone, and then it's going to go up. What's your take on that, Victor? What do you think?
I'm looking at it. I just think, this is a great find, I just got to say, because you very rarely see such perfect small time frame distribution schematics. These are like 1-2 pip stop losses, and you just take them to the equal lows, and you don't even try to really, and you could have 15, 20 to 1. I've seen at least 2 in this entire range. At least 2, and price just perfectly every time it comes back, mitigates out of this is beautiful. But what I would do is I would literally, I would continue monitoring price action in real time. So like the previous 2 distributions, they're not looking like much. I would monitor price action as it breaks, and then literally see how price forms then to find that entry, whether it's going to come down to the 1 hour candle or whatever it is that it's going to do. Because right now it's ranging and it's just setting up a bunch of traps. There are sellers from the top that are thinking it's going to go down. There are buyers from the bottom thinking it's going to go up. And chances are we're going to see some massive manipulation to take both out before getting an entry.
Yeah. Yep. I mean, this is kind of what I'm thinking is going to happen, right? Something like this, whether, and right now it's kind of in here, right? It's in this portion right here. We've got equal lows. We've got some equal highs, So I'm looking to see. You're the seller from the top right now. Okay. Yeah. I mean, listen, if you're in the sell from the top, you're protected, right? So if it does come up and create that liquidity run or that up thrust after distribution, and you're fine. You're just going to get, it's going to be a break even. No big deal. You know, I personally wouldn't buy it right now though. I wouldn't be looking to buy it. I'd be looking to buy once it creates that spring or that shakeout, you know. But it is, I mean, this is a pretty interesting schematic. Like I'm definitely going to keep tracking it because I want to see how it plays out. And I want to see that way I can go back and back test it and digest exactly what happened. But yeah, I mean, yeah, it's, you can definitely see buyers entering the market and you can see sellers entering the market. So it's going to it's honestly going to be dependent on what, who takes precedent, who has the bigger control. But for me, I think it's long term. I think it's still going up. Yeah, it's definitely in a range. Yeah, it is 100%. One of the things here, I wanted to look at USD CAD as well. So, right, USD CAD, I was looking to see, I knew we were. What's that?
Delete it off your watch list.
That's what I told you. Bro, that's what I told. Oh man, I hate UCAD. Listen, redistribution, right? I was looking for the sell, and the stupid thing, I wanted it to come up above here, and it never did. I'm like, oh, we're all right. We're doing this. I was waiting. Man, you know what? Yeah, I do. I need to delete the damn thing. But honestly, that's kind of all I'm looking at. I was looking at.
Can you hold on? Don't go off the chart. Go back to UCAD.
Yeah,
I just want to show you something that's real good. I just noticed it right now. I haven't looked at it in detail, but okay, watch this. So hold on. I'm just gonna annotate. Okay, watch. So right here, this is where you're looking. Sorry, this is where you were looking for a UTAD, right? To take it down.
Yeah.
Okay. I'll tell you why it didn't happen. I just noticed it. Okay. So number one, we broke structure here.
Mm-hmm.
From here and from here. Number two, this is our trap right there. So break a structure, trap. I guarantee you, I can't see exactly. I guarantee you we did come above here. And I guarantee you look down on the 1 minute time frame or some really small time frame, there was an institutionally funded.
Not only that, but this right here on the 1 minute was distribution. I guarantee you. Like just looking at how it played out, it was honestly, what scared me or the reason. Yeah, it was distribution. Watch here. Let's look at it at a smaller time frame.
Sorry, man. It takes a second I keep hitting clear and it just doesn't.
Yeah, no worries. Yeah. So, yeah, I mean, here's your distribution on a 3 minute, right? And I was even looking potentially. What time was this at? 4:30 in the morning. Yeah. So this one wasn't. This is not the candle I was looking at. So you could see this potentially maybe a 5 minute. Let's see. Not even a 5 minute. What a 15. Well, yeah, it did. I mean, it created an up thrust. Look at that. It definitely broke these highs. It just didn't go high enough. And then I was personally looking. What time was this at? This box 6. This was like around when I got up. I was looking in this area here to get a look at this, and it just sat here and then just melted, man. Damn, I hate UCAD. Yeah, this is where I was looking to sell from if it came back. It just didn't. Traps and mini only exist. No, they don't exist. No. So what we're talking about with traps, and not like broker manipulation, Mike, but we're talking about like manipulation of actual price is what the banks are trying to do, right? They're, like what the institutions are trying to do. Because even on, regulated brokers, you're getting it too, and it's just what that institution is trying to induce, like what they're trying to, what their agenda is. And remember, like, so if a
show it right on this chart. If you go back to, I don't know what time frame you were on, but like that 5 or 15 minute or 1 hour, I don't remember what time frame we were annotating on.
Where do you want me to go? On the small, in here on the smaller time frame?
Yeah, that where the sell happened.
Yeah. Here, hold on.
Where we sold off. But go to the 1 hour. It's really easy to see on the 1 hour.
All right.
It's just going to be really easy to.
There you go. She's
all
all
right,
yours.
awesome.
Go ahead.
So, yeah. So basically, and can you widen it? Yeah, perfect. Yeah, wonderful. Okay, so all it is, can I draw? Yes, I can draw. Okay, good. So all it is, so here's what we're looking at. We're looking at this entire box right here, right? Because inside this box, price is clearly moving sideways. Every time price moves sideways, we're either getting accumulation, distribution, reaccumulation, redistribution. That's why price stalls, because it needs to, it's out of orders. It needs to accumulate orders again for price to continue going down. Otherwise, manipulation is going to be like one order goes in and price just flies everywhere. So here's a trap. So here's what happens. We make a high, okay? And then what we do is, so this is the low right here. This is the low that caused this high. And over here, we make this low, which comes back to what seems like mitigate out of this candle right here. And we break structure. So everybody is going to be thinking that when price comes up, because we broke structure, price now needs to mitigate and continue selling down. This is what the market is telling us. Everybody is thinking that we need to be mitigating out of this candle right here. Right now, hopefully everybody here understands what this concept is, right? Because this is how price moves. It breaks structure, it comes back, mitigates, lower low, lower high, lower low. So everybody's paying attention to this candle. Now, this candle is not the candle to pay attention to, because what people are doing is they are looking at this low as being the break of structure, and because this low right here broke, because this is the low right here that people are looking at for break of structure, they're going to look at, well, what was the last high that caused the break of structure to happen? Does everybody understand that? If you guys do, then you'll understand that this right here is going to be your seemingly like equal highs or equal lows trap. It's called an institutional trap, because if you pay attention, this is the low that caused this high, and this high right here caused this low right here. I don't know if that makes sense to everybody, but what happened in between in this area here is completely irrelevant, because this middle move never actually broke structure to the upside or to the downside.
Yeah, it's just noise, break a structure. There you go. I must be up some good money. It's just noise. So like one of the things you guys might want to do is go back and back test this, because I know that's one thing that me and Victor have been doing, is like sharing our charts on these traps and understanding what the institutions are trying to do, because ultimately this is an institutional move. Like the trap isn't being set by retail traders. The trap isn't being set by hedge funds, right? This is honestly, these are the large institutions that are controlling the market. So for us, where they say that they're trying to attack retail traders, they're not, right? They honestly don't even care about us. What they're trying to do ultimately is trap other institutions, into transferring a little money on their side. Oh, let me kill this. Damn, that was a nice setup, man. Beautiful broker structure. All right, man. Awesome. Well, I'm up 2% on that. They're known to trade off the daily and not the hourly. Well, Victor, what's your thought on that? Because I know you've spoken to an actual institutional trader. Do they say what time frame they're normally doing their work on?
Sorry, what was the question?
What time frame do institutional traders typically trade off of?
So from what I know, and this is from backtesting and speaking to some other individuals, you want to mark up your charts in H4. So your points of significance, okay, need to be in H4. So what you want to do is you want to mark out, now if H4 lines up inside your daily candle, this is how I mark up my charts. I don't trade except G. That was something I was going to talk to Mike about later on, is that GU setup him and I were talking about was actually wrong because we were in the middle of just a candle. We weren't, like, there was no institutional candle in there. But what you want to do is you want to mark out all of your institutionally funded candles on H4. H4 is where the highest probability reaction is going to happen.
Yeah.
And then inside that H4, you want to go down to H1, 30-minute, 15-minute, 5-minute, and find that ideal institutionally funded candle that price is going to react off of, where you have that nice imbalance, you know, you have that buy to sell or sell to buy, etc. But H4 is where your chart you should be living in H4.
Yeah. Yeah. I mean, not only that, but it gives you the bigger time frame, right? The bigger picture on that, like that, because the H4 to me is still the intraday move. You know, so it gives you what is going on, you know, during that intraday move. And then you can break it down. Then you can get down and actually see, you know, on the smaller time frames for your entry. But most I'll tell you right now, most of my analysis when I'm looking at the daily and the H4. I even look sometimes at like the 8 hour as well, you know. But yeah, Victor, what are you looking at, man? You want to share your screen and show me what you're looking at?
What am I looking at? That's a good question. I haven't really marked up anything.
Yeah. I mean, it's early in the week. I EU for me is still what I'm looking for. You know, I'm curious to see what the stupid CJ is going to do, you know. Now, one of the things I did want to look at, hold on, I just wanted to see, bro.
Let me go over GA.
Yeah,
it's a trade that got missed. That was a good trade.
What do you mean it's a trade that got missed?
And H4 and daily, the daily example, it's perfect in GA.
Let's see.
If you want me to.
Yeah, go ahead. I'll share. Hold on, I'll give it to you. Hold on. Let me go to where you at. There you are. Oh, all right, hold on. Stop share. All right, bro, it's all yours. Go.
All right, hold on. Just let's see. Okay, here's GA. All right, so GA. Oh man.
Oh, GA. Oh, I thought you said EA. Oh, yeah, no. I know we missed GA. I know.
Not EA, no.
Yeah.
GA.
Dude, I had
Yeah.
it marked up. I had the stupid thing boxed off.
I just couldn't find an entry. Like I was looking. Remember I messaged you last night and I said, hey, 15-minute GA is bullish. And then I changed my mind. No idea why. And I said, you know what? I don't know if it's bullish or not. Price action is a little confusing.
Yeah.
And then today, you see I have the come and get me sign, and it obviously did. So, but from a marking up charts perspective, you know, and looking at just very simple supply and demand zones. So the way that I do it is I'll start on the daily. Like here, I'll clean up my chart. It's very simple. I'll start on the daily and I'll just understand where we are inside the daily time frame. And looking on GA, obviously we're super bearish. Like this is very, very obvious. However, GA, we can very easily tell, started to stall. Like, and every single time we see this sideways thing, we're like, okay, well, maybe something's going on inside GA. We should take a look, probably. And then over here, we can see this is a clear accumulation. We're creating equal highs. we have some targets, and we have a ton of room to go up. So if GA is actually going to be accumulating, we'd like to catch those buys up. Now, inside every larger time frame accumulation, there's going to be a smaller one. And all accumulation is basically what you see is you see a move up, and then you see lower highs and lower lows, and then we see a break of structure, mitigation, and then move up again. So right now, the way that I was looking on GA was I saw this liquidity right here. I saw that we are potentially in an accumulation schematic, and all we were waiting for is for a spring to happen. Now, what was interesting to me about GA, which isn't necessarily visible on the daily, but I always pay attention if we have like a lot of bullish candles, I'll always pay attention to where that odd stutter candle happened, because stutter candles are usually many reaccumulations or many redistributions every single time. So what I did is I marked up the stutter candle and I went into the 4 hour. This is before I even mark up the schematic, before I do anything, okay? I go to the 4 hour, and what do I see? I see a very clear reaccumulation taking place, where we had our spring or shakeout. It doesn't matter. Like, it doesn't have to be accurate on the higher time frames. We broke structure. We came back to mitigate. We left. So automatically, right off the bat, this area becomes interesting to me. Now, in 4 hour time frames, what you want to be looking for is unmitigated areas. To me, if a 4 hour candle has mitigated another, like an imbalance on a 4 hour candle, the 1 hour is much less important to me. So let's say the 4 hour, wick to wick, we've touched, there's no imbalance, there's nothing, everything's been mitigated. But we go down to the 1 hour and there's an imbalance left inside the 1 hour, I'm going to give the 4 hour precedent over the 1 hour. It just, the higher the time frame, the more precedent it should be given. And then you should see the 12 hour, like the 12 hour wicks, they just come, meet, touch, and fly away. It's crazy how the higher time frame, higher time frame price action works. So if I know that this is a reaccumulation, and one thing I am paying attention to is we made this last low, and then this would be our breaker block, because we had structure right here that pushed to this low, and then we stalled around this exact same structure. We reaccumulated, which means we needed a lot of thrust to break up, and we broke up. So this reaccumulation, put a box around it. Even if it looks mildly like a reaccumulation, I still put a box around it, simply because I know orders are being gobbled up. Broke up. So my intuition, or the technical analysis on this chart, would tell me that if price was to come back, now a lot of people are going to make a mistake, and I have, for this reaccumulation, I have a test area right here. But the thing is that if we break through this reaccumulation, this test area becomes pretty much invalid, simply because the amount of orders that it would take to come through this area would be astronomical. Like, some institution needs to really have its sights set on selling GA before it comes through, breaking through this order block right there. So this order block becomes interesting. Everything is mitigated on the 4 hour until we see this really massive push up. So all I do is I mark this candle up on the 4 hour, and I also mark it up on the daily. So I'll go back, I'll mark it up on the 4 hour, I'll go back to the daily, and I'll see inside which daily candle it's sitting. And the reason I mark up the daily candle is because this is my larger range. So anywhere inside this daily candle, price could technically come into, because this is where the trade sort of happened, quote unquote. And then, so anyways, this has been identified. GA clearly broke structure. It built really nice liquidity to the upside. And now price is once again moving sideways on a much larger time frame. So this is how we identified our point of interest. This is where we have a schematic. Point of interest is number one. Without a point of interest, if we're starting to build like an accumulation schematic, and Mike could speak for this on UCAD, because UCAD accumulated 17,500 times over the last
Yep.
2-week period, and every single accumulation failed because on the higher time frames we're just not there's nothing there. Like UCAD, if you look back, it should be continuing to fall right through the floor. It should be, because previous price action tells us. But anyways, listen, it doesn't hurt to try, because long behold, it breaks structure, and next thing you know, it starts to reverse middle of nowhere. But these high probability setups are going to be around areas where you had previous supply, which is this, turn into demand. And how do we turn supply into demand? Well, we accumulate orders and we break through the previous supply zone, because this should have held up. This should have held up. And by the way, when this reaccumulation happens, guess how many people were selling here? Look at how this candle just punched right through it and FU'd everybody out.
Yep.
Because of this reaccumulation. So we pick our zone, we have a schematic, we know we're ranging sideways, and we know we're building liquidity at the top. So now, super high probability that price comes to this area here, and this is where we have STB, so we're looking for a spring, the area lines up perfectly, and right inside that spring, and this happens more often than not, when we get a spring, what we want to see is an accumulation inside the spring. And basically all it is we want to make a lower low, a lower high, a lower low, a lower high, and all of a sudden we fail to make a lower low and we break structure. I mean, this is like the simple way of explaining an accumulation. Somebody's having a hard time seeing them. So we're inside the 4 hour. I had like 17 alerts set on this, and then stupid GA didn't give an entry. That's a whole other story. And like, look how nicely price comes in. So here's the thing. Typically, when we are getting a true reversal in price, it doesn't run away instantaneously. Now, I still get FOMO all the time, pull the trigger way too early and get caught in a break even or even a loss scenario, okay? But price will take its sweet time in a true reversal scenario. True reversals don't usually happen over just a single candle. Most people think, oh, this is the moment it's gonna happen. It doesn't. It just doesn't. A lot of people, I guarantee you, a lot of people, when price came in here, a lot of people saw this reaction, and then price came right here, and then people saw this reaction. I guarantee you, people were buying. There were buys being set in here, and price just punches right through. So, and we need to pay attention to how this entire accumulation stays inside this 4 hour candle. This is why the H4 is just so huge. Because H4 candles, you properly identify in H4 candles, you're going to see all the price action you need to see in the world inside that one candle. So here's how I was looking at price at the time of, well, last night, basically. So what we want to see is we want to look at structure, the most basic structure. We made a low, we made a lower high, we made a lower low right here. I know it's a wick. I know theory tells us that the body needs to close lower, but I started paying attention to wicks closing lower. I give them more precedent now than I used to before. We made a lower low right here, which means we made a lower high and a lower low. Guess what happens in this candle here? We break structure. When we broke this structure, because you guys should let me know if something is not clear. So here's our low, here's our high, right? Remember, I am not paying attention to any of this mumbo jumbo here. None whatsoever, okay? Here's our low. So this high caused this low. Then here's our lower high that comes and makes our lower low. I am only paying attention to this leg, nothing else. This, the body breaks structure, and so does the wick by like a pipette. But to me, a break of structure is a break of structure. It's enough to see change in momentum. No, not pulling the trigger on anything yet. Then we build liquidity right here. We punch through it. Now here's where I was pissed off because I just couldn't understand. I'm an extreme, like I like to take the extreme low of the trade, like to try and get the tightest stop loss. When we were building this liquidity, zoom in on the 1 minute, just so you guys understand price action. So number one, whenever you're looking for a spring, springs have a very specific type of price action that will indicate that the spring has happened. And the specific price action is this kind of movement in the candlesticks. You don't see this kind of movement anywhere but a true spring that leads to a true break of structure. Okay, we get a spring, we start building liquidity. This is perfect. I'm thinking this is the entry. Now, like I said,
Hey,
I don't catch a lot of them, but
no, that's where I'd be looking to. One of the things too that I've been reading in this Wyckoff book I got was the change of character, which is just what you were explaining. You know, like the change in momentum, change of character. You know, like a change in which it indicates that something's going to, you know, price is going to be going the other way. So that's one of the things that's really helped me is understanding, you know, that break of structure, what it really represents.
yes, exactly, and also how it happens, what type of, and this is something that's really difficult for me in real time because sometimes I want to believe it so much that I will like sort of almost be like, no, this looks good enough when it's not, and then a fake out happens. But anyways, these candles, well, that's what it is, right? Like these, like it's, you know, this is the psychology part of it. There's nothing you could do about it, right? Like I'm like, this is it. This must be the spring. I convince myself that it is. It isn't, and then it's a fake out, and we get a true spring, or price just goes the other way. So anyways, we build liquidity, and one thing I look for is a lot of taps, like a lot of taps. The more taps we have, the harder the whatchamacallit, the sweep is going to be.
Yeah.
So we got a lot of taps. I am confident that price is coming here. This is a 4 pip stop loss. My stop loss goes to, my entry is at the 1 minute candle, and stop loss is at the 1 minute wick. Not here. Like I'm just, you know, this is, I threw back testing. If this is a true IFC, price is going to come in, tap it, stall. It'll never go lower, and it'll just reverse. If this gets broken, 99 out of 100 times, we have a false entry, period.
Yeah.
But this thing, what does it do? It comes down to like freaking, I don't even know where. Like I looked at all time frames. I don't understand why it came down here. I mean, you could say the 15-minute candle open, whatnot, but this was a 17 pip stop. I can't take a 17 pip stop. Like it's not possible.
Yeah.
The best thing I could find was on a 17 pip stop, and I'm so used to taking, you know, below 6 that, or 7 or 3, 4 even, that for me this is just crazy.
Well, it's not worth it. Yeah, it's not worth the risk.
And then no, it's not worth it. Well, it went for 170 pips on a 17 pip stop. It's a 10-to-1, but it had to go for 170 pips. Like I want to be a break even when it goes for 25 pips, and I'm already sitting at a nice 6-7-to-1.
Yeah.
Do you know what I mean?
No, I do. Listen, I'm sitting at a 3.5-to-1 right now on UJ.
Yeah, it's beautiful. The tight stop losses are, and you don't need a big move. Like you know, I caught EU. That was not a huge move.
Yeah.
Anyway,
No, hey Bonnie, you really want to laugh is so this morning when we took CJ, I was like, yeah, I took it was a 2.8 stop loss for me because we didn't, me and Victor didn't share our actually entries. Like we were just talking about it. So I did my entry and he did his. I was like, yeah, mine was 2.8. And he was like, yeah, mine was 2.5.
Yeah, that's right.
I was like, all right, yeah, well, you know what? I gave it a little, like I gave it 3 pipettes, you know?
Oh, you beat him out, Victor.
Yeah, hey, but you know what? The whatever, you know, it is what it is. Hey, he took the loss. I took the break even.
Oh,
So I'm up. I'm up. Yeah. But
I have got to learn this. It's like
I
trying to
tell you. So
get
it's definitely helped me. Listen, I was a decent trader, obviously. I mean, I got my account. I look what I did with my account. But
You're more than decent, okay? You're
Well, yeah.
humble, but you're more than decent.
But I'll tell you, this here has really, really. I mean, like if you could only see the potential, you know, I mean, there's some guys that I know that are trading that are, you know, they're grinding, right? They're grinding they're taking 4 or 5 trades a day, making 2 to 1, 3 to 1 ROIs. And,
Yes.
you know, I literally would take one trade and it's a 20 to 1 and I'm in that trade for 3-4 hours, you know? And it's understanding, you know, exactly what is going on with price action, you know, truly understanding what price action is doing and just trading what you see. You know, I mean, yeah, there's some trades. I mean, there's some trades that like and that's one of the things mindset wise that I've really had to work with, especially dealing with a large lot size, is doing a 2-pip stop loss, you know, where if price hits your stop loss, which is 2 pips, that's a couple $1,000, you know? So, and that's the hardest thing that I have to deal with, you know, but when you're dealing with a small account, you know, I mean, honestly, train yourself now to deal with it. Cause, you know, I mean, like I used to take small stop losses, you know, months ago, you know, we're talking 12 pip, 15 pip stop losses, but I can't tell you the last time I took a stop loss that was anything over 10 pips, you know, and 10 pips was being like over, you know, careful, you know, some of these are, I mean, this UJ trade that I'm in right now was only 7 pips, you know, and that was one that I had. What's that?
You know a guy who took GBP G-Chef trade, 301 to 1 on a 1.3 pip stop loss.
Yeah. My goal is to hit my first 100 to 1. I've gotten close. Like I think I don't know, a couple weeks ago, like we had one that was like 1 to 52 or something like that. I mean, not that it was close, but it was halfway there, you know?
76.
Well, yeah, no, you took what was that, like EA or something? I think you took the EA trade or CJ trade. I think it was one. Yeah. Yeah. You know, but I mean, it's there, you know, it's there. I mean, a perfect example is like yesterday, right? We were looking at EU and Victor took the EU trade yesterday afternoon at like 3:30 in the afternoon. I personally didn't because I was like, oh, you know what? It's the end of the day. I'll catch the pullback after 6 p.m. because I was trying to be cheap and not have to pay a swap fee, you know. And you know, long story short, what did you end up with that, Victor? You ended up with a 1 to what, 20?
26.
Yeah. So he ended up with a 1 to 26 and I had nothing. So because I waited, you know, like I didn't want to jump into it. You know, I had it marked up, you know. Actually we had talked about it. I think we talked about it the whole damn morning. We were like, yeah, this is the entry. This is where we're going to do it, you know? And it just so happened, like when the alert went off on my phone, I walked over to the computer. I was like, it's 3:30, you know, you know, chances are it's going to pull back down into my lower buy range and I'll just get a better ROI. But yeah, it would have been nice to start the week off with a 1 to 26, you know? So, I mean, it is what it is, you know, I'll make up for it here on this UJ where it goes up to a 1 to 20. So, but, yeah.
1 to 10s in 10 minutes.
Yeah. Well, listen, I'll tell you a perfect example. That CJ trade I just went over, I was up. Well, I mean, it wasn't much, but I was up almost a 4-1 in 3 minutes. It was a 4-1, and that's honestly why I went to break even. Cause I told myself, no matter the stop loss, if I'm up 2-1, I'm at break even. There's no sense in taking the loss, especially if I'm up 2-1, so, it is what it is. But anyone have questions? Anything you guys want to look at? Any charts? I know for me, it's early in the week. My big days are Wednesdays and Thursdays, and I kind of want to see what price is doing tomorrow. I'm really, I guess my entire week is built around the dollar index right now. And if we get that, if we get that really nice break of structure and then the test of the spring, I'm going to be looking for some really nice moves on UJ, on EU, on GU. I'm really not looking at AU or NU right now, just because of what's going on with the anti-per diems. So, I honestly, like I told somebody today, I was like, if you wanted to, all you have to do is just trade EU. If you catch, if you really just dedicate yourself to EU, not that I'm a one, currency pair person at all, cause I'm not, but if you really just wanted to simplify it and follow the dollar index and follow EU and take 3 trades a week, but those 3 trades are all like, 1 to 15, 1 to 20, 1 to 30, you're done, you're good. Yeah. Go ahead, Ivan. What's up, man?
Can you hear me?
Mm-hmm.
All right, cool. Yeah, I have a couple questions from the Wyckoff accumulation type 1, type 2 schematics.
Yep.
The material I was reading, they refer to in phase A of it, the widening of the spread and stuff. So is that like a structural thing, or is it the spread and the price, or like what is it?
Yeah. So it's the spread and the price, but it's not like on our broker price. It's the actual order book. But what really you have to look at is the volume, right? And unfortunately, because we are, because we're trading like on TradingView, right? You're getting your feed from like a Wanda, or you're getting your feed from like FXCM. We're not truly getting the actual volume in the actual order book, right? The actual market that is being traded back and forth. But from my back testing, it's doable, right? So like one of the things I look for is in phase A, if you are starting to accumulate, right? Or I guess in distribution as well, you want to see a decrease in volume. Okay. So you want to see essentially less orders coming in. All right. And that's kind of giving you that change of character, right? That change of momentum, that something is getting ready to happen. And then you just have to follow through the rest of the schematic, right? You need, and I'm sure like if you've done some reading, like the phase A and B, there's no trading to be done in phase A and B. It's literally just sit and wait for the schematic to play out. And then once you get to phase C, where you get your spring or your up thrust after distribution, is where you get into your trade, But that's what they mean. The spreads widen, and the reason spreads widen is because of the order flow. There's a reason. So like if you've noticed, right, on your broker, Euro USD is probably the lowest spread differential currency in your entire trading book. But you get stuff like NZD CAD or some of these exotics. Look, if you really want to look, I've never looked at them, but if you look at like, I don't know, like odd NOK or something, or, the Turkish lira versus the pound, I guarantee you they're going to have huge spreads because the order flow on them, right? The volume being put into them isn't as high, so the less order flow, the higher the spreads.
Oh, okay.
Just keep in mind too that all the material you're reading is on stocks.
Yes.
Does not. One of those things. Now, theoretically, Mike, and you'll agree to this, 99% of what we look at is simple, technical price action. There is nothing else. We don't pay attention to volume. We don't pay attention to spreads. Obviously, you're not trading, market close to Asian session open, because no pair is going to have a good spread, but we're mostly paying attention to price action. And this is why I took the trade, because I'm like, screw it. The technicals are telling me that I should be in this trade.
Yeah.
That's it.
And yeah, so like
Right?
Wyckoff, right? So Richard Wyckoff, if you read his history, I mean that's where his theory and strategy was materialized. It's from the stock market, and that's that whole schematic oriented is all based off of both technicals and emotions in the market. So yeah, I mean, like we don't. I personally could care less about order volume. Like every now and then I'll look just to, and it's not even to trade. It's when I go back and I'm doing my journals and I'm printing out my charts or I'm saving the charts into my external hard drive. I'm just correlating. All right, so there was decreased volume here. But there's sometimes that there's not. There's not a clear definition of order volume. Whether it's in, and you're supposed to see, like on the spring, you're supposed to see an injection of volume, so you're supposed to see that spike, but on the test of the spring, it's supposed to be decreasing. Like I really don't need to worry about that. For me, and like Victor said, we just trade what we see. If it springs and it breaks structure, guess what? I'm taking the order. If it doesn't break structure like GU did today, I didn't take the order. Which one was it that if you just wanted to trade one pair? What do you mean?
EU.
Oh, EU. I mean, just because one, it's got the lowest spreads, but two, you have a currency that essentially is, it's an inverse correlation, the dollar index, so you can just compare the two. If they're diverging, if one diverges from the other, and depending if it's up on the top or on the bottom, it's almost like a cheat book. It's telling you, what's going to happen to the laggard,
I'm like back testing now. And this is just to a little more in EU. I'm back testing now to learn how to scalp EU intraday, because it is just overly clean. I think it has the highest amount of liquidity out of all currency pairs.
Yeah, it's the most traded. It's the most traded pair. That's why it's always got. I mean, like right now on my broker, I've got a 1 pipette spread. Which is fantastic. Especially when you're taking 2.5 pip stop losses. Every pipette counts. So, you want to look at. You have a 2, yeah. You want to look at US 30? Yeah. I mean, we can look at US 30. I mean, honestly. Like until I've noticed, or one of the things I've been doing is I don't even like look for an entry anymore unless it's right before market open. And it's simply because like there's, off hours, it does what it wants. There's like occasionally you'll get a decent schematic. But yeah, I mean, it's, like I can tell you this, it's bullish. The indices are bullish. I'm not. Later, Mike. Have a go, man. I'm personally not looking to sell any of these indices. I mean, I know there's some strategies that you can do. Like listen, Armando's got it down. I mean, he definitely has it down, his strategy. But for me, yeah, I'm not looking to sell them, and I want to see where we're at. Maybe like that London crossover. To see where I want to buy off of, because right now the easiest area that I'd be telling you to is like in the 28,380s area, that lower where we created the spring. I'd like to see if price comes down into that area. What time frame are you on, Victor?
On 1 minute. I just want to show you, because I was looking at US 30 earlier, and we did get the character, which was very evident inside this candle right here, where we sprung, and we're talking about the accumulation and just that divergence in price that I didn't like, but we did spring right here, and we
created
did
a high
break structure.
Yeah, we broke structure. Yeah.
We just perfectly mitigate, and we flew.
Hey, what time was that at? 9:32. The test candle. Yeah, son of a gun, bro. Dude, I was listening. Yeah. So long story short, I was at the gym this morning, right, with the wife, and we decided to walk to the gym. So like I literally got into my door at like 9:35. And then by that time, that was that second candle of bullish structure going up. So I was, yeah, it never came back.
So I have a
Left, and it
question.
just never. Yeah.
Right there where it had the break of structure, you would have been waiting for the retest or the spring.
Which happened here, Bonnie. Right there. This is the test.
Yeah.
Because Bonnie, and that's the thing. I'm not very good at catching these yet. But this tiny little break over this candle here is a break. Now, what gives it away is the simple momentum of this candle. We had 3 candles come down and then 1 solid candle break structure. This is changing. These are the little things, like, look how price is stalling inside this entire range. Like, these are the things that we try to look for. Price has come down very, very sharply. It stalls and it breaks structure right there.
And it does it in one.
Yep. And if you think about it, so it essentially it engulfed, right, the 3 previous candles, you know, so that gives you the change in momentum.
Here is the trap. Here is the trap. We have a low structure, break a structure, but look at the momentum. This is not indicative of a spring. This is indicative of a trap.
Are we on the one minute?
Yep. Yeah, that's the 1 minute.
Okay. Thank you.
All time frames, same thing. You look at the 5 minute, you want to see that, like, if buyers are coming in, this should be evident in the market. If sellers are coming in, this should be very evident in the market. Right? And this
With
is
a
where,
bunch of different candles, correct? Like buyers coming in should be multiple candles instead of just this one big one, right?
No, you want to see big candles.
Yeah, you want to see it take off, right? Just like it did. You could see how it did, right? So essentially what happened is the first bullish candle that engulfed is buyers entering the market, right? That was the evidence that buyers got into the market. And then the pullback where it retested into that spring candle, that's buyers testing the demand zone. Yeah, that candle right, that wick, that is, and you could see how it would take four candles to the right. So all those candles there, that's them testing demand to see if there's enough buyers willing to take it up, you know? And that's essentially what happened, you know? What was the stop loss? 17?
Oh, 40.
That's 40 points?
It was big.
Oh, man. Big. I don't know if I would have taken that. I don't know if I'd taken a 40-point stop loss on U30.
Besides the point of it's, you know, price, this is what price did, right? Price action, you know, it's to me, this is the one thing that I find most challenging at this point of, you know, my trading journey, is to identify correctly the candlestick change of momentum or the change of momentum in the candlesticks.
Yeah.
So this is where,
Ray, your question about do we consider wicks breaks of structure? So it depends on what you're looking for, right? So for a schematic, for me, yes, the wick, I count the wick as a break of structure. But if you're talking like if we're just doing like higher highs and higher lows, and we're just looking as far as yeah, I mean, we're just looking at basic structure, then I personally like the candle bodies, you know, but for schematics, for like accumulation and distribution and stuff, yeah, I count a wick as a break of structure.
For springs, because the thing is, when you get a spring like this, right, you're going to get big wicks in here. So you really want to be paying attention to those wicks, because those wicks are representative of that really fast change in order flow, in price action. Um, and I know retail teaches rejection of the wick. I don't know how all that works. So for me, I've never learned it, so I don't understand that those concepts. But I know that it's wicks, but more so momentum. Momentum is what you want to be looking for, and those wicks will have a lot of indication to where momentum is going. Now, had this been a doji candle, with just wick and wick, yeah, no, I don't think I would have considered it. But because it engulfed, but the body didn't break structure, the wick did, and it engulfed. This is a very strong candle.
It's what the candle represents, right? So when you look at that candle, you see strength, right? You can tell, like I see, for me, that candle displays that buyers are in the market, and that's what I'm looking for, especially if I'm looking to buy off of a spring. I want to see evidence that buyers are willing to get into the market, and that's what that candle accomplishes,
So everybody understands this trade here is the most difficult trade to make. Trying to buy the test of the spring is one of the most difficult trades to make inside a schematic.
Yeah, well, that is especially off of a 1 minute. If you caught it off of like an hour spring, you have a little more, because I think the hardest part is, you literally have 60 seconds to decide, right? 60 seconds, because that candle, think about it, that candle, that bullish candle happens in 60 seconds. And then you literally have probably another 45 to 50 seconds to decide whether or not you're going to pull the trigger. And, for me, that's honestly why I box everything out. When I start to see an accumulation or a distribution, I box it out. I start putting my nomenclature on, and, from there, I already have a game plan. And like, you'll see me when I share charts, like I'll put the arrows. I'm like, this is what I need to see. If I don't see this, I'm not taking the trade. So my mind's already made up, so that if I do get down to like a 1 or a 2 or a 5 minute chart, and I've got to make a decision very quickly, if it's panning out the way I, did my game plan for it, then it's no questions. Bam, And me and Victor, I've talked about it. Like we break CJ was a no brainer for us. We got the break of structure on the 1 minute. Bam, we're in. And there was nothing wrong with that trade other than the fact that buyers just fizzled out, and then sellers took control.
I'll be honest with you, because we were trading, every time we try to get into the range as early as we do, I'm going to start hedging more, because that CJ should have been hedged at the top of that breakout.
Yeah.
We should
At the very, when it broke the top of the range. Yeah.
When it came back, when we bought and it came back to the previous high, we should have sold it from there. We were like four pips in profit at that point. We should have sold it from there, because it literally came back to test the 1 minute candle before it continued down. Because we're trading against probability, no matter how you look at it. But if probability goes in our direction, we could potentially, at some point in the future, it hasn't happened yet, but get on a trade, which is a single trader's wildest dream.
No, I agree. I agree. Honestly, these are things that you have to, you have to decide what your game plan is before the actual buy and sell of that trade. This is one of the things, when I say to you guys that I spent more time like back testing or game planning, or when I'm on the charts, like I'm not actually trading. I'm drawing stuff up, and I'm trying to play out how price reacted, and how I would react if price reacted like this. So Ivan, hedging is essentially being in a buy and a sell at the same time, but from different points. And it's honestly to protect your profit. So Victor, go to CJ and just show him what we were talking about. Like where?
I'll draw.
Yeah. Yeah. There you go.
Okay, Ivan. So imagine we bought right down here. We took a buy right down here. I'm sorry. Imagine price comes back. So it makes this high, and it comes back right there to do the test, and we take a buy. Now this high, the trend is still very bearish. We know this from here. So who knows? The buyers that we think are in the market might flake out for whatever reason, and price is going to continue going down. So we buy here, price comes up. This is our previous high. There's a candle of interest right in here. And what we do is we sell from this point here. Now, if price continues to go up, then we get stopped out. We take a 1% loss, but our 1% loss gets covered by the buys that we took.
Right, the 1% gain. So it's like breaking even, but protecting your profit.
Yeah, you're protecting your profits. However, if price starts to go down, and all of a sudden we see that our buy position isn't working out, well, we're going to break even our buy when it comes down here, and the sell is going to be the trade that we're going to be profitable. That is going to be profitable for us. So one way or the other, we win.
Right.
That's the idea.
Does that make sense? I mean, it works because like I mean I've done it successfully on a couple of trades, but you have to understand, you know, exactly where you're going to buy and where you're going to sell and why you're doing it. You know, and again, I typically do it if I'm already. A perfect example is UCAD has been selling. It seems like all year long, right? It's been in a sell. So every time I got into a sell, I would take the sell and I'd be holding the sell long term. And then I would take the short-term buy. And if the buy didn't work out, I'm still in the sell, right? And that's all been covered. So that would be an example of when I'd like to hedge. If I'm trying to, you know, even though you're not supposed to, but try to pick the bottom and you're going off of a schematic and everything's in your favor, you know, you take it, you know, you're there. So
This was it right here, right?
yeah. I think so.
This was it. Yeah.
It was this morning. I know that.
The price action is, yeah. Oh, yeah. This was it.
Oh, that's what it is. Because I wanted it to break that high. I wanted it to break the high. And if it you know, the high that, that previous high. Yeah, it reacted right off that candle, man. Look at that. Bastard.
Yeah, so we took our buys right there. And why did we take our buys? Well, very simple. We had a break of structure. This high caused this lower low. We broke structure to the upside. It was, I mean, getting a reaction to at least break even is a guarantee. Okay, so it was a no-brainer for us to take the buy from the last candle that needed to be mitigated, which was right there. Stop loss, right there. Right, my stop loss was here. I think, Mike, you put your stop loss right there. That's what I think our difference was.
And that whole the differences was 3 pipettes. So when you look at that, I mean that looks like it's a lot, but it's literally 3 pipettes.
So I was considering this. I was kind of torn when I was doing this because I was like, should I put my stop loss at 0.9 or 1 pip, or should I put it at 1? No, my entry was right here. I'm sorry, I took it from the wick, not from the body, like from here, because I didn't see an imbalance. So, anyways, yeah. So we react. This is the head. Here's the thing. We know that price is coming down. We know that we reacted. We buy on a break of structure that came up halfway through the last leg. Like this was a very minor break. This wasn't a true break. This wasn't a strong break. It was a weak break. So what we should have done is we should have taken the sell when price came to this candle right here.
Yeah.
Okay. We should have taken the sell right there and also taken it down. Price is now trapped. Either whichever direction price decides to go in, we're going to be inside a profitable trade. unless it just starts to go all over the place and it breaks the even on
Yeah.
both sides of the trade. But
Yeah.
anyways,
Like I said, I mean, I was break even. You know, it sucks, but it is what it is. You know.
so that's the hedge. I don't know, Mike. You got anything else?
No, I mean, like I said, I'm waiting to see what tomorrow opens up and brings. You know, I know Bonnie wanted to look at US 30, but like I said, honestly, for me, the indices are bullish. You know, I just, I don't know what London's going to bring. I could tell you for me on like U30, like I personally needed to get down to like 28,360 for me to look at a buy, you know, because everything in between, like all of New York session was pretty evenly traded. You know, so that's, I mean, and I'm not looking to sell it. You know, I'm not gonna. I'm done like trying to counter trend trade the indices. So yeah,
And just so you guys understand, like this H4 was marked up. I was looking to sell it from here today. I just there was nothing to sell from. But look how perfectly price reacts from, once again, the H4 candle. Those amazing H4s. How about my markups disappeared? What is trading you doing to my charts?
I don't know.
I don't see markets.
Hey, I got a couple alerts on DXY. I think it's trying to. Oh yeah, look at that. We're getting a break of structure on Dixie.
Is it starting to move up?
Yeah, it's at equal highs right now on the break of structure.
It's moving. What's he doing right now?
It's coming down. Yeah. I don't have that pending order, but I'm gonna wait on it. Yeah. I'm gonna wait. I want to see what happens. I want it to take those flows.
Last point of supply, dude. I mean, this LPS entry right here from that reaccumulation, this reaccumulation still holds. This is our demand zone. This right here, it's coming into it, and it's coming into it nicely. What I want to see is, I want to see these equal lows.
Yeah. That's. I definitely want those equal lows to get taken. I'm in the same spot. Yeah. I am looking. I want to see us. What is it? 50. Yeah, the 15. Go to the 15-minute. I'm looking at that 15-minute candle. At 1.1878.
This one?
No. Go to a 15-minute. Yep, that one right there. Bam. That's what I want to see. I want to see us get into that candle, and then I want to buy from there.
Yeah. I'm looking. I've had this marked up since this entire shenanigan.
Yeah. I've had it marked up for like a week. So that's what I'm waiting on. I want to see us get down into there, because that would be the break of structure on DXY, you know, for the spring, and then we get the pullback up into the test of the UTAD, you know. So yeah, you know what, I don't know, depending on what happens, maybe tonight before I go to bed, I may just put the order limit in with a 0.25% risk, and then just go from there, see what happens.
Yeah, no, I want to see this entry come in the morning. I want to see that 9 to 10 o'clock reversal.
Yeah.
This entry. Like, I want to see them just build orders. I want to see them punch really hard, and then I'll just take a market execute on it, or not a market execute, but a limit order on it without waiting for break of structure or anything like that, because I think this is really strong.
Yeah. Bonnie, are you talking about an order limit on EU? Yeah. I mean, like I said, it's up to you. For me, I think we're gonna get a nice reaction off of that. The question, you know, the thing I would caution you with is, like, I'll tell you right now, I believe, right, that we're gonna get a bounce off of that 15-minute candle somewhere in there. The question is, do we get a 15, 20 pip bounce, or is that where we're going to reverse to go up and create the test, right? So if you're asleep and price moves 25 pips, but you don't go to break even and then it stops you out, is the risk that you're going to have to take, for me, like I think what I'm going to do is, because I get up, at all hours of the night anyway to, like to put an ice pack on my back or something like that. So I'm going to have my alert set, and depending on where price is at when I go to bed, I may put the limit order in and then just, if I'm up, move my stop loss.
Yeah. Bonnie, you also want to, like, more often than not, you also want to be, and because Mike gets up, I don't know.
Because Mike sends Victor his charts at like 4:30 in the morning that he's got like a 1 to 15 going right now.
You want to be able to see, and this is what Mike does when he gets up. He'll glance at the chart just to see what price action is doing. So if it's coming into a point of interest, how is it doing it? Is it flying in there like like a fighter jet, going in on an attack, or is it trickling down nice and slow where it's showing that it's starting to quote unquote slow down and we can see a potential shift in momentum? Because it's going to be really difficult to shift momentum when prices fly in like this, like these candles you see right here.
Yeah. So like, exactly. Like what I see right now, like I, even if this was like New York session, I would not be putting a buy limit in right now. Like I would wait for, some consolidation, some slowing down, some even trading, and then if I see those signs of, like that change of character, that momentum change, then absolutely I put the buy limit in, a good example. Here's a great example. If you go to UJ, just go to the UJ chart, and you'll understand exactly why I took the the trade. If you go to UJ, you'll see like price just created a bunch of liquidity. I mean, all of New York session was sideways. Look at that. All of New York session was sideways, and so I had 2 points of interest I was looking at, and go to the 15. Go to the 15-minute.
You took it from the break, right? Like we broke structure, and then like this. What time did you get in?
No. I got in right now at 7:45 is when my order got in. Yeah, are you on the 15-minute?
I'm on the 15, yeah.
Yeah, so just zoom in. I got into the right. Zoom in. No, to the right. There you go. So I got in off of that right there. See that last down 15-minute candle? Yep, right there. That's why I got in. That wick. I literally had a 1 pip bet drawdown. That's where I got in. And the reason I got in is because we broke structure, right? We created a new high. And you see how we just slowly trickled sideways and then dipped in? Yeah, it was a 7 with my spread. It was 7 pips stop loss. So
you're crazy. Yes, you're what, 5 to 4 to 1 now?
I am almost a 4 to 1. Yeah, 3.99.
No, I think UJ is going to continue going up because remember this area I marked out?
Yeah, it needs to
50%.
It needs to get up into that imbalance. So my take profit is 106,500 is where I want to take it, because that'll make it just over a 10 to 1. So yeah.
And then we still have. I mean, I'm super bearish in UJ. Just that second entry that never came in, but
No, I'm bearish too. Like I want to sell it, but I want to sell it from up there at that. I want to sell it from at least 106,500. It needs to get to at least 106,500. Like I'm looking at like 106,800 area,
Let's talk about UJ for a second, because this is if we're on UJ. I was looking at it earlier, and here's what I think is going to happen potentially on UJ. So the only thing that I see is complex pullback happening. And I see, and it's a little messier than I'd like to see it, but we see, count the legs 0, 1, 2, 3, 4, 5. And what I'm seeing right now is, I know that we broke structure here, but we are failing to break structure right now. And I think if UJ comes up, I think this is going to be our inducement candle. This is going to be the fake out candle.
Right.
Okay. And if we look closely, it's going to make perfect sense for this.
Oh, yeah.
So we have a distro.
Yeah. Take all the highs. Yeah.
We're going to take these highs. It's going to come into this 4 hour right here. And this is where we're going to see the real sell-off happen because price has been awfully spiky. It came down, it came up, it came down.
Well,
like it's
especially for UJ. I mean, look to the left. Look at that distro to the left on UJ. Do you see how like that ranged in like 100 pip range, and now we're getting intraday moves of 100 pips. Yeah.
So I'm just seeing a complex pullback that just hasn't yet been finished. And the simple fact that we have body and wick closures that didn't even come close. So one of two things, either we're getting a complex pullback into here and we're going to sell off down, or, which I think is the higher probability, it just seems like the more probable cause, because I think everybody's looking at this candle and they're like, this is what we're going to sell UJ from. This is beautiful. We got a change in momentum. It punched down. It's like the perfect candle, and this makes me not want to sell UJ from here.
No, I agree. Yeah. I just, in order for me to sell it, it needs to get at least up into that imbalance area, you know. But I don't want to sell it until, for me, I need to see an actual distribution schematic on lower time frame to even want to sell it. Because I mean, if you just look at the daily or the H4, I mean, realistically, for the last month, we have just been trading in a range. You know, you can see the range high and the range low.
Got some stuff on it. Hold on.
Okay, guys, I got a question.
Yeah, go ahead, Bonnie.
Because I'm that one that would have looked where he said back where you've got the last up candle, it had the smaller buy candle and then the engulfing left candle.
Hold on, did you want me to go back into Bonnie?
Hold on.
Did you want? Can you hear me, Bonnie?
Yes.
Okay. Should I go back into the smaller time frame?
Please. Where you were just at.
Yeah, I got you. Where are we looking? Are we looking at Mike's entry right here?
No, you're talking about you would sell from that last up candle, right, Bonnie? Is that what you're saying? Yeah. So go, Victor, just go to like the 1 hour. Go to the 1 hour, up in the top, like 106, 800 area. The top, the lot, where the leg that we broke structure with, selling it from the top of that leg. You know what I'm saying?
Here?
Yeah, up higher. Yeah, right there. That last up candle right there. Perfect. Yeah.
Up from here, right?
Yes, because see, that's the one that I would be looking at.
Okay, but tell me, okay, so let's look at it. Bonnie, that's fine. I mean, this is what logic would tell you to do. My issue with this is that let's just have a look at where structure is, where structure came up to, and where structure failed. So Bonnie, you have to look at whether this sell would be valid if this punch came lower.
Yes.
And we actually broke structure on the downside.
And the answer would be yes, Bonnie. If that happened, if we broke and made a new low, then yes, I would be looking to sell from that area you would be looking at. Yes.
Okay, because the reason I would be looking at it is I would look left and I would go, okay, you've got the 3 up candles. This would have taken out all of the imbalance in that area because everything looks like it's been traded, And then, so then the next place up is where the red lines are.
Mm-hmm. Yeah.
And that's where
So
y'all are looking at.
I'll show you something, Bonnie. Watch.
Okay.
This low and this point right here, this is the trading range.
Yep.
Everything that is inside here is noise,
Yep.
meant to confuse.
And it does a good job.
Yep. Well, just think about it, Bonnie. So let me ask you this, right? So you said that
Okay.
that is the area you'd be looking to sell from, right? Up there. How many people
Yes.
do you think would be looking to sell from there? I guarantee you, throw a fib on there, and I guarantee you there's a candle open that's around like the 88.6. So everyone,
100%.
I guarantee you, is probably going to be trying to sell exactly from the same point. If everyone is trying to sell from there, then you know the institutions know that's, you know, and again, they don't care about what we're doing, but if there's a hedge fund that has got a couple, you know, couple $100 million or even, you know, low billions, right, that they're trading, and they're going to be putting an order right in that area, that's exactly the trap that the institutions that are trading, you know, hundreds of billions of dollars are looking for, to try to grab that liquidity.
Exactly. That's exactly what it is.
So, okay. So I guess then what I don't, because I was looking for that last up candle, and now I don't, to be honest, I don't know what I'm looking for
It's
any longer. Does that make sense? It's like
so
I haven't evolved enough.
this is the easiest answer that I can give you, right? Try to figure out the agenda, if and this is how I trade, right? This and Victor will tell you, like you just have to try to mimic an institution, right? So you're a greedy bank and you want to you want to win no matter what, right? So how are you going to win this trade, right? That's how you have to attack it, you know.
So let me ask you this then,
yeah, go ahead.
because then thinking like that, I've got it, rather than this mitigating the right hand candle that the hump's over, rather than that mitigating out that looking to the left, what I see to the left now is equal highs. And if I'm the institution, I'm going to go above those equal highs.
Correct. Yep. We're going to run liquidity, and we're going to create we're going to create an up thrust after distribution.
Then why would I not run the liquidity further to the left?
What do you mean?
Because you've got liquidity over there as well.
Go to the left, Victor. What's
right there, where you've got it boxed off.
Because
Bonnie, look.
Go ahead.
You have to. Sorry. This is not liquidity. This candle took out whatever was here. Then we have 2 points, and we barely, like, I don't even know what this is in here. This isn't true liquidity. When you're looking for liquidity, you want to see liquidity that creates momentum.
Okay, so why is that not liquidity? Because once it built there to the left and it fell.
Yeah, I understand, but I don't know how to see. I don't know. The best way I can explain it is it's not lack of a better
so
word.
Here,
it's
let
not,
me wait. Here, I'll give you. Let me give Victor. Let me try, because I think I know what she's trying to throw out there. Hold on. Let me see if I can annotate on your chart here. Hold on. Where's annotate?
It's that top bar at the top of your window. Like if you let it drop
View
down,
options.
just hit that.
Hold on. All right. Well, what the
It's
heck?
under view options,
View options.
which is at the very top. You are viewing Victor Bernard's screen view options.
Oh, I got you. Okay. So here, I see it. Bam. All right. I've never done it on someone else's chart. So here, let me do it. Let me show you this. Right. Okay. So move to the right, Victor, a little. No, move. Yeah, move the screen to the right. Perfect. Okay. So here. All right. So let's look at. We're going to look at here, and then we're going to look at here. Okay. So this is liquidity in here, right? The reason that the one to the right is liquidity because we have in this point here, sellers got into the market. Price comes back up. We have evidence of more sellers coming into the market. Price comes back up, sellers in the market. Price comes back up, sellers in the market. Here, sellers got in the market, and that was it. And then it just came, right? Even though that this area right in here is you can say that there's equal highs, but there's no evidence that more sellers got in the market. There was no like tug of war. There was no, this was probably one seller got in here, right? And then one seller got in here. It wasn't multiple selling opportunities, right? That's the easiest way that I look for, right? I look for, price moving away. So if you come over here, right? So you could see like here, sellers got in the market, price comes up, more sellers got in the market, price comes up, more sellers got in the market, right? So every time you see that momentum, that's money being pushed, that's liquidity, or not liquidity, but that's order flow being injected to create liquidity at those points. So what's sitting up here, right? What's sitting all up in here are sell orders. You might only have, a very, the order flow here is probably very small at this one here, if that makes sense.
Okay.
Does that kind of explain it a little more?
Yes.
Yeah. So like you want to see evidence of sellers. So you want to see evidence of sellers coming in the market, right? That's what you want to see. You want to see, or buyers if it's on the other side. But that's what truly causes liquidity, right? If that's the easiest way to describe it. I don't want to see price ranging in a 5 to 10 pip, range, for like 4 or 5 hours. That just means low volume, right? If price is just sideways in a very, very tight range, there's no volume there, right? There's no order flow. There's nothing moving the market. All
Okay.
right. And Victor's the one that taught me this, right? So like on Euro USD, and this is what a trader told him, that for price to move 1 pip, it requires a $1 billion order, right? You need an accumulation of $1 billion to move 1 pip. All right. So if price isn't moving, there's just no orders, right? There's no order flow. No one's buying or selling. All right. Hopefully that kind of answers it a little better.
Like retail traders don't the market. They don't do anything in the market. Mm-hmm. There's less than 3% of all the volume in the market is retail.
Yeah.
So the whole thing of they're waiting, and the minute I put my stop loss in, they seen it. That's nonsense.
No, now that your broker can definitely do broker manipulation, right? So like just hypothetically, say your stop loss is at 106,750, right? But on the order book for the actual market, right, goes up to 106,746. Your broker, right, can manipulate and go up to 750 and hit your stop loss. And brokers that do that are typically are B-list brokers that are like when you look at the contract you sign when you join their brokerage firm, they have to tell you if they are taking the opposite position in your trade. So like if you hit a buy, they automatically hit take a sell, just because statistically retail traders lose. So if your broker is a B-list broker, that's what they're doing.
Coinex.
Coinex definitely does. I can guarantee Coinex does. You'd be surprised. Most regulated brokers do. They'll take the opposite end of it. And it's just think about it. It's smart business. If you have just say you have 100,000 accounts, and 95% of those accounts lose, why wouldn't you? I would definitely do it. So I mean, yeah, but that's broker manipulation. Now, and it all depends on the liquidity provider that they're getting from, and that's just, you have to do the research to see, which brokerage you want. I mean, that's one of the reasons I went to FX Choice, because, they don't. So that's, that was a plus, now they don't on the pro account. I don't know about the regular account.
Yeah. Well,
So,
so I started working towards doing those smaller stop losses.
mhm.
And then it seemed like I no more would do an order and have a small stop loss that it looked like 90% of the time I get taken out.
Okay.
And it's just like, ugh.
Bonnie,
Yes, sir.
I'm now, no, like 99% of people are not ready to do small stop losses. This is just because, Mike and I talk about it doesn't mean this is something that you want to jump into. You want to stick to bigger stop losses. You want to give yourself a little bit more room to breathe. Small stop losses require a lot of technical analysis.
And not only that, but I wouldn't jump into it on a live account right away. Like demo trade it, demo trade it to get a better understanding. Cause it does. I mean, it takes a lot of understanding exactly what you're seeing in price action and understanding, like I said, it's very quick and it's something that takes a lot of practice. I mean, I can tell you just for me, and I mean, Victor's definitely done it more than I have, but I probably spent hundreds of hours back testing and marking up charts and doing replay mode and going back to understand exactly, what schematic I was seeing, and even then I get it wrong, I mean, realistically, I'll tell you right now, I'm only like maybe 50 to 60% accurate, but now I lowered my risk. So I only do 0.5%. Sometimes I only do 0.25%. And I mean, you've seen it, like when it hits, all right, I've lost 4 in a row. So on a 0.5%, I'm down 2%. But then I get one of those that go 1 to 25 or 1 to 30, and I'm up 15%, in an afternoon. So for me, I understand mindset wise, I understand that I'm going to lose a ton. But for me, it's worth it because I'm taking less trades, and the trades that do hit, like perfect example, UJ, right? UJ, I'm at break even. I'm not taking profits. I'm going to take profits when it hits take profit. If it doesn't hit take profit, guess what? It hits break even, and I don't lose anything. I don't gain anything, but I don't lose anything. But if it hits take profit, that's 5% that I got during Asian session, and to me, that's like a win in my book. So,
Okay.
Yeah.
It's funny because I go back. Remember the teaching you and I did, Victor, way back months ago? Gosh, it's probably been 6-7 months ago. And I ended up video recording it, and I keep going back to that because that I was profitable with.
Well, let me ask you this. So, and one of the things that I do, so, and I like I said, I spend more time back testing and more time journaling than actually trading, right? And I had a conversation with one of my buddies about this the other day. So when you go back and back test, right, and you say you took a loss, okay, what is what is your main discrepancy, or what was the reason for the loss? When you go back and you look back and you say, okay, I lost, but why did I lose? What is that reason? Did you just have the wrong point of interest? Did you, could you have, gotten away with a larger stop loss, or was your entry off? Like or was it just the bias just completely wrong?
Remember when I said I think the light bulb finally went off?
Right.
With the whole test and the retest.
Yes.
And then you hear the trade house guys talking about, yeah, you got people doing the break and retest.
Right.
So in my mind, the break and retest is wrong.
Okay, so we're not doing so I'm
not understanding.
Okay.
That was the disconnect for me.
Sure. So we're not talking about break and retest of a zone. right? That's not how we trade. We're just talking about break structure, right, off the spring, and then and the test, it's not a test of the zone. The test is test of supply or test of demand. Okay. So all that really is, and if you watch Mike Navarrete, like Mike Navarrete will explain it as just a pullback, right? He puts a fib from the low to the high off the spring, and he looks for anything between 71 and 88.6. And that's how he enters, right? Where I actually, like me and Victor will try to actually find the candle volume and that they need to mitigate out of, whether it's 50% or the open of the candle. Honestly, the way I decide whether I go 50% or the open is just by the stop loss. If I can get the stop, what's that?
We don't use the fib.
Who uses the fib? Mike Navarrete.
You don't.
Yeah, he does. Yeah.
At this point, that's the thing. Like the fib isn't necessary.
No, he doesn't. But you know what? He just does it for simplicity for people. You know what I mean? That's like if you watch it, like, yeah, that's all he's doing is like, okay, yeah, but it truly doesn't, the numbers like the 71 or the 88.6 on that mean nothing. It's literally, you just need to find the point of supply or demand that it's going to test. And that's all it is, right? Like we explained, you're looking for the strength off the spring. You want that engulfing candle. You want the evidence that buyers or sellers are getting into the market. And once it breaks that structure that you're looking at, right? Once it breaks that previous high, then you're expecting a pullback to test the supply or demand zone, right? To see, and essentially all that price action is doing is testing to make sure that there's enough order flow to continue going up.
Okay. Well, I think that was where my disconnect was.
Yeah.
And I kept going backwards. Like I would enter the trade backwards.
Bonnie, how much time do you spend on structure? Just simple structure. And how well do you understand it?
Not enough. Even with watching y'all and trying to draw it out.
Yeah, structure is key. The understanding structure is the most important part of understanding, essentially anything. Structure is key, because if you and listen, there's sometimes I get it wrong. And when I get it wrong, I take a loss. And you know what? That's in my notes. I put bias was wrong. Going back, I see, structure was bullish, not bearish, but understanding what your higher timeframes are doing, and then understanding, that the lower timeframes just have to get, in relation to the higher timeframe, something,
I think I need to go back to just one pair.
I mean, listen, it's up to you. Like I said, I'm not a one pair trader, right? I'm an opportunistic trader. If I see something on a pair, I'm going to trade it,
Right.
because, realistic, like I said, I mean, realistically, you could be a one pair trader. But what happens if, you just have to be prepared that if you don't get a setup on that pair for a while to not trade it, a perfect example. I haven't actually gotten into a trade on any of the indices since I think last Monday, right? Just because I had the opportunity to, just it didn't come into my order or into the point of interest that I wanted to come to, So if that's the case, I haven't traded it for over a week, and if you're a one pair trader in that one trade or that one currency pair or whatever, trade you're going to do, you keep missing it. You just have to be mindset wise. You just have to be prepared to deal with, the fear of missing out on it. And that's honestly why I'm not a one pair trader, because I financially can't, go 2-3 weeks without trading a pair. I mean, I could, but if that happens more and more and more and more, say, I only get 2 trades a month on it. Well, that sucks. That's not going to really help my equity curve.
Right.
So,
Hey, Bonnie, just so you know, I'm trying to reduce the number of pairs that I trade, not to add, right?
Yeah.
Like, everybody's going to be different. Like for me, for instance, what my goal to do is to get to a maximum of 3 trades per week, and not have more than 6 pairs that I trade, and that's it, and only study those 6 pairs. Now, ideally, I'd like to get to even a lower number than 6, and all it is that I'm going to do is like I'll look at liquidity, I'll look at where the lowest spread is, and where price acts best, so to speak, like where it just respects price action and structure, schematics, and all these different things. So, you know, and everybody's going to do it different. So, Mike, I cannot make as many charts as Mike does, but at the same, but at the same time, it works really well.
Yeah, you know, and one of the things that me and Victor have found out is there's certain pairs that are just clean, right? I mean, they constantly have clean price action. So those are the ones that we trade. You know, those are the ones that we have in our in our watch list. You know, there's some pairs that like people send me a setup on, and I'm like, hey, that looks great, but I just don't trade that pair. You know, I don't trade any of the Swiss francs other than the occasional US dollar Swiss franc. You know, I don't trade, you know, I trade yen pairs, US dollar pairs, and some of the euro pairs. You know, that's pretty much it. You know, in GU, you know, occasionally GA or GN, but that's it. You know, like I don't trade a lot of the other stuff, you know, and it's because I've noticed that some of the pairs I like to trade are very, very clean price action moving currency pairs. So.
Okay.
Yeah.
Well, if you can go, I just know guys who only trade EU. Like if you're having a hard time marking out multiple charts, take EU and literally study it. Like just backtest it as far as you can. Start with the higher time frames, mark out structure, and then inside points of interest on higher time frames, try to figure out why price reacted inside those points of interest and where that trade could have been taken. EU is probably, I mean, Mike will back me up on this, is probably the cleanest pair
No, it is.
to trade.
Yeah. It's the cleanest yeah. I mean, that's like I said. I mean, you can literally. I mean, I know you can find a trade every day on EU. It's just whether or not it's worth it. You know, like for me, I'm not taking a trade on EU that's 25 pip stop loss. You know, I'll wait for something to get into a little better. You know, into a little better ROI for me. You know, but you can find a trade every day on EU. You know.
Yes.
You know, just because and just trading that New York session, because if you just go back and look at what London did, you'll be able to find the trade setup for New York session. You know, it's just like I said, it's a matter of whether or not it's you know it's worth it. You know, like I said, I'm not going to take an EU trade that's only going to give me a 3-to-1 ROI. You know, for me, it's not even worth I'll tell you right now, it's not worth the margin because I got to deal with margin now, you know, and I got to understand, you know, I can only take 3 trades at a time because of margin. And, you know, God forbid one of them is a pound pair. So.
Okay.
Yeah. So, but it's like I said, structure is everything, you know, and there's sometimes that, like I said, that I get it wrong. And it's because, you know, one of the things I really like, you know, I was reading a book, and there's sometimes when you are dead set on something, but something in the back of your head is telling you, now, you know, whatever, like I walk away, like I'll have to go for a walk, or I'll go to the gym. I'll come back and get a fresh look on it. And then, like I said, I mean, I send a screenshot to Victor. I'm like, hey, what do you think about this? And sometimes he'll tell me, man, this is bearish all day. And then I'm like, really? You know, one of the things that's helped me too is invert the chart, right? So if I'm looking at, you know, just like I did on Euro USD where I inverted it, invert the chart. Because sometimes if you're looking at selling, it may look totally different if you invert it and it's looking at buying. I know for me, I see accumulation better than I see distribution. So if it's in distribution, I just flip it and I'm like, oh yeah, boom, here we go. You know, and it's easier to mark up for me that way. If that makes sense.
No, that didn't make any sense.
So show her, Victor, real quick. So you go there on the bottom right, and you see where it says invert scale. Yeah.
Yeah.
And it just flips this. It flips the chart.
Yeah. I do it all the time too.
Yeah. Yeah.
Yeah. So all you do is you hit on this little gear button here, you left click, and then invert scale right there, and it flips the chart for you.
Oh Lord, y'all really are trying to blow my mind now.
Listen, we when I tell you that we spend hours, I mean, but it, you know what? I mean, honestly, it translates to, you know, the time you dedicate to it translates into the profit and equity curve, you know. I mean, I can tell you that I mean, I made a pretty decent amount of money last year, but I'm gonna, I'm well over what I made last year, and and that's with less trades, but it's the time that I'm putting into it, and I understand, like there's some times where I just have to walk away, like last week, it was a great, even though I had to do another side job, but it was great to just get away from it because it kind of let my brain just reset and, not have to worry about any charts, not have to worry about seeing anything and dealing with it, So, but
Sending warnings.
yeah, yeah. So, but anyway,
Thank you guys.
Yep. Yeah. Like I said, I mean, the I don't know. I had a conversation with a buddy of mine, and the conversation went like this. Like he was not struggling, right? Because he definitely has a strategy down packed. But when he takes losses, he takes big losses because he violates his rules, right? So and everyone I know always wants to throw more money in their trading account so that they can trade a higher account. Um, I'm always a firm believer in master the strategy that you're trading first, before you start dumping more money into it, and then go from there, because like I can tell you, trading a couple $1,000 account, and then being able to really have confidence in your strategy and trading a 6-figure account is definitely night and day, right? So, and like I said, I mean, there are ways to make a lot of money, once you get it down. There's, I mean, just going with the funded brokerage is, that where you're trading their capital is worth it. I mean, that's that gets, like I said, I wish I knew about that crap a year and a half ago, because I would have, retired a whole heck of a lot sooner. So, yeah.
Yeah, I'm still at that little account.
Yeah, but I mean, listen, it's it everyone's.
I had a 4% gain today.
Hey, that works,
It
that
does.
works, um, like people always ask, hey, what's your daily goal? I don't have a daily goal anymore. I'll tell you that. I have a weekly goal. I try to make 10% a week now, and that's with 0.5% risk. So, if I get a 1 to 20, I'm done for the week, um, and that's only risking 0.5%, so,
Nice.
but
So I know it's doable.
no, it is. Listen, it's very doable. I mean, I'll tell you right now, percentage wise, I guarantee you Victor makes more percentage than I do, cause he definitely, I mean, I would say that we're both taking less and less trades. We're just being patient on the trades we're taking. But he definitely catches, for some reason, I don't know if he's got like a lucky rabbit's foot or something. For some reason, like I would be looking at one trade, he's looking at the other, and I'm like, all right, I'm going to take this one. He's going to take that one. All right, sounds good. And his will go for like a 1 to 30, and mine goes to like a 1 to 5, and then goes to break even. So,
Well, I started focusing on that R&R and like really trying to like get that higher time frame, lower time frame analysis down the pack. And this is when I started sharing the stuff with you, right? And I'm like,
Yep.
hey, Mike, these are, a 10 pip stop. I got in with a 3.5 pip stop. So that's where, that's the only difference. The analysis, I think, is pretty much the same. I just think it's the stop loss. And you're trading a bigger account than I am, but I figured that I might as well get it on the smaller stop losses with a smaller account. So
Yeah.
I can gradually.
Yeah. No, I mean, those precision entries are where it's at, and if you can just be patient for them and, yeah, I mean, if all it is just patience and understanding the price action you're seeing. Because if you can truly digest and understand what's happening on the chart, once you see those moves happen, I mean, a perfect example is UJ tonight. I mean, I had a perfect entry. There was zero drawdown on it. So, if it plays out, it plays out. If it doesn't, hey, I might break even. I don't care. Let it play out. So, yeah. But just keep at it. I've read books and I've heard stories about people that just give up on it. I would say just keep at it. I mean, you're going to get your breakthrough on it.
I refuse to quit.
Yeah. I mean, I could tell you this. So the way I'm trading now is different than I was trading a month ago. Not entirely different, but just small little fine-tune things that I'm doing. I adapt every day. Like I find something new every day that I can perfect and can work on. So I mean, heck, Victor, what was it, like 3-4 months ago? I had difficulty identifying schematics. Like I had an idea, I knew what I was looking for, but I truly didn't understand the concept of it. And now, I mean, now I understand it perfectly to a T. I can, it's just a matter of just waiting for the right entry.
Yeah, I've got to study the schematics because it's like, I know y'all can see them just scrolling through like that. And the things that I can see easy is the liquidity. I can see like on where he just was, I could see that break of structure going
Right.
up. But what that means.
Well, that's the hardest part is understanding. I'll tell you right now. So like this book that I did last week, right? Hold on, it's my thing. There it is. This book that I shared last week, the Wyckoff mythology. Like I've read it twice now. I mean, it's not that long. What is it, like 400 pages? Oh, not even 226 pages. I've read it twice now, and like I've taken notes on it. And that truly has helped me understand Wyckoff. Right? It's understanding like supply and demand zones, understanding what price is or what the market is trying to do when it's accumulating or distributing or reaccumulating or redistributing.
What's the name of it again? So I can look for it on Amazon.
Yeah. The Wyckoff methodology in
Okay.
depth. Yeah. So if you just type in Wyckoff methodology, it's the only gray book and it's by a Ruben Villahermosa. But it's cheap. It's like $20. And they even, I would recommend the book, not the Kindle version. If you do the Kindle, I did both. And the Kindle version is kind of hard to read because it's it's really small and you want to be able to see like the graphics and everything. So, but yeah,
Paperback, 22 books.
Yep, there you go. That's it. Yeah. So
Oh,
like I said, I've read it twice now. I'm probably going to read it a third time just to see if I've missed anything. But I took an entire notebook full of notes on it. And that's, I have actually started to go back now and back test, like I look at the trades that I've taken, in like the last week. I go back and see if there's anything else I could have identified or got a better entry on or shouldn't have taken an entry on, and then go from there, so, but what are you doing, bro? Structure?
I have no idea, man. What the hell is EA doing? This thing is confusing me. I know it's doing something. I know it's getting ready for something big. I just don't know what.
What is that, EU?
EA.
EA. I don't know. EA. I did EA just like you told me to do UCAT. EA got deleted off my watch list. That's what happened. EA, because I got so tired of it.
Yeah.
I got so tired of that. What was that? Is that like a 100 pip range, going back to like January?
This is an accumulation range from June for.
Yeah, there you go. June. Look at that. Shenanigans, man.
I
So
have
don't
this
look
one
at the
candle
EA.
in here.
Yeah.
And it's slowing down, but once again, look at this stupid price action.
What time frame are you on?
This is 4 hour right now.
Yeah.
There's this one candle entry in here, and it looks so like the reaction was insane.
What's the pip difference between that low to the point of interest you're looking at off that candle? 28 pips. I don't know, man. I'll tell you right now. If you go down to like let me see what the 1 hour looks like in that not there, but the actual what it's doing now, current price action.
Yeah, current price action is bullshit. That's what it is.
Yeah, look at that. I mean,
You got some equal lows there.
I'll tell you right now. You know what it looks like. So, let's see.
Right now, redistribution as of right now.
Yeah. Because it made the UTAD. Yeah.
Yeah, and then it broke structure right here. But given the fact that it's diverging, I mean, who the hell knows what it wants to do?
Yeah, I don't know. I hate exactly what you did with UCAT. I did with EA. It is no longer on my watch list. That thing sucks. Yeah, that thing sucks. I'm not I don't know. I don't know.
Just look how they just don't know what it is.
Yeah.
This is gonna result in something. I can't for my life figure. Like, look at this. This was an accumulation that failed and then it collapsed. Did you see this?
Yeah. Well, it collapsed a lot.
Like this reaccumulation and it just collapsed. This thing drives me nuts. But I really want to catch whatever it's doing, so I just keep looking at it once a week.
Gold Cup called a buy on EA earlier today, like when earlier this morning. Why would they call a buy on that? On EA? Really, Ivan? Why the heck would they buy? Bro, you know what they probably did?
Yeah, on the Telegram chat thing, they called in a buy. Let me see if I could find it. I'll show it to you guys.
They were probably buying off support, man. That's one thing. Like I've noticed, like everyone is. Me and Victor said this the other day. Everyone's like bragging, trade with the banks, but they're not really trading with the banks. Like
yeah, I picked up on that. I was listening to Luke, anyways, and he was trading with the banks. Look at this liquidity. And I'm just like, well, I wonder how long this method will last if everybody now has flipped over to, he's been watching the Trade House guys.
Probably, but he's not doing it right. I mean, I don't know. I haven't watched him in a long time, but just from like occasionally I'll look at the charts that they send out, just to see maybe I'm not seeing something, but like they're not labeling it right, and the bias is off, Yeah, I mean,
everything does is break and retest. That's
that's pretty much it. I mean, so the reason break and retest works sometimes, right, is like because on a schematic, when you get a signs of strength and price doesn't create a spring but comes into a last point of supply, well, that's your break and retest, right? That's essentially what a break and retest is, but that doesn't happen all the time. That only happens a small amount of time. Like I started going back to some of my old charts when I used to trade break and retest to see, well, why did I lose this or why? And it's clear. I mean, like it totally makes sense. you know, like the triple bottoms or the double bottoms, you know, but you get that FU candle or, you know, that comes down before price just takes off. Well, that's straight up accumulation, right? Understanding where to take the buy off of is everything, you know. Look at that, bro. Take that chart off your watch list, bro. Look at that. That thing is, what is that, the daily?
Oh, it's the Eiffel Tower.
Get that crap, bro. That is horrible.
Got the Eiffel
Hey,
Tower right
do
in the
me a
middle.
favor. Hey, let's look at structure. Can you do all the structure points for me on that? That is garbage.
That is terrible.
It's garbage.
That is like, wow.
You know what you need to do? You just need to trade it off the daily. That's all you got to do. Trade it off the daily. You know, you'll get your 10 to 1. It might take you 10 months, but you'll get your 10 to 1. Bro, look at that.
This is so bad.
Whoever caught the freaking Statue of Liberty shot there, it is probably done. That's it. They retired EA. That was their grand slam in the bottom of the ninth. The poor bastard waited 15 years to catch a move on EA, and he finally got it.
Well, inside this candle right here, because oh my God, I would be looking inside this daily candle right here, because now what I'm seeing right now,
I think it's going to go down, but
go down.
yeah. I think it's going to make. I don't know. You're gonna have to mark off like the 2019 low and maybe like the 2018 low, but it's definitely going to take the 2019 low.
First, I'm gonna have to find them.
Yeah.
Because this is, but yeah, I think EA is gonna go down. I don't understand how it's. Anyway,
Whoever
it's
trades
really
head and shoulders is so happy off that. The thing's been doing head and shoulder patterns for the last 10 years.
I deleted it off my watch list. I'm not touching it anymore. It's a freak.
I love it. Yeah, bro. Yeah.
Good night, guys. Thank you.
Have a good
so
one, Bonnie.
much.
Later. Have a good one.
All right, dude.
Yeah, homie, I'm out, man. I'm in UJ. Hey, I'll get up early in the morning and I'll see what else is going on. But I mean, I want to see if EU can just go sideways during London. I'll look at that buy in the morning.
Yeah. Well, yeah, UJ is supposed to go up. Go up, UJ. I want UJ to go up. I really want UJ.
Yeah, so do I. I mean, the buy was just opportunistic. I want the sell, right? I want to see where we're going to take it up to, and it made sense. The buy made sense. Like I had it marked up probably this afternoon, and I just honestly I forgot to take the buy limit out. So, you know, when I got the alert that the buy was activated, I was like, oh, okay. So, but it gave a freaking nice reaction. You know, I'd really like for it to, you know, at least break the high from this morning.
No, it's perfect, and I mean, it's got room to go up. Like this imbalance is attractive. It's got room to go up.
So where I took the entry was the first point, and then my second opportunity I wanted to take an entry off of was 105.50, which is if you look at 105.50 on the 15-minute, you'll see like a 15-minute candle there. That's kind of where I wanted to take it off of. Yeah, go down a little.
Low.
Right there. Boom. Yeah. It looks low, but it will take those equal lows out. But I kind of want those equal lows to be intact because that's going to be one of my targets when we start to sell down. Like that'll be a take profit area for me.
Sell down. Price action is going to be. These are the targets right here. These equal lows.
No. Absolutely. Yeah. Yep. Yeah.
You're looking. I know.
Yeah, I've got it marked off. Yeah, 105, 200 is where I'm looking. I want to take it to a nice 20 level, and then my final take profit. I'll tell you right now, my final take profit is like 104, 600. It's like into that 4-hour candle. If you can look in the 4-hour, that's where I want to see us because that needs to get mitigated out of because on the 4-hour, that was the last down candle before UJ decided it thought it was an astronaut.
And it didn't break.
Yeah.
All this momentum. Oh my. Because I'll be honest with you, I was hoping we would break structure so I don't have to look at this stupidity over here. I was really hoping that this momentum would break structure, and then it just decided not to. And disappointing. Very disappointing.
Yeah, it's just dancing, you know. It's actually what it do. I think it created equal highs on the 5 minute. Yeah, it did. Look at that. Beautiful. Created equal highs, it just came down into the on the 5 minute, came into the last down 5 minute candle. So let's see if it goes up, you know.
Just watching UJ move is like watching paint dry.
Yeah, dude. I don't look at it, man. I don't listen. I'm at break even. I'll wake up tomorrow morning either happy or like, you know, it broke even. So I don't care. Awesome, Ivan, man. Yeah, absolutely, dude. Yeah, just study it, man. Just study it. So that was their entry. They called an entry at 62.38 on EA. Wow, dude. Look at that stop loss. You see the chat on EA? Stop loss was 38 plus 23. So that was a 55 pip stop loss. Holy crap. Wait a minute, a 55 pip stop loss with a 20 pip take profit? No. 55 pip stop loss with a 20 pip take profit. Come on, man.
Hey, listen, Mike.
Yeah.
I can blindfolded with my arms tied behind my back tell you a trade with a 50 pip stop loss and 20 pip take profit.
Yeah.
55.
I'll tell you, I'll win that. Hey, I win 95% of the time.
That is insane. I would always win. It would be 99% of the time.
No, it would. It would be like 95%. I mean, you would only make 10% in the year, you know, but yeah, you know, you'll have a high winning percentage, you know.
Wow.
And say you do like 100, say you take 10 trades a week at 20 pips, man, you could put down on the thing that you caught 200 pips. You risked 2,000, you know, but you caught 200.
This is absolutely,
dude. I can never trade like that, man. That's horrible, dude. One loss wipes out 3 wins.
That is insane.
Yeah. Oh well.
I mean, that's a 1 to 3 or 3 to. How do you even read that properly? 1 to 3, right?
That's a 1 to -3, right? Or no, that's a 3 to 1. 3 to 1, not a 1 to 3. 3 to 1, right? The opposite.
Yeah, because we always say it the other way.
Yeah.
Yeah.
You're risking 3 to get 1, where we would risk 1 to get 3. So.
Dude, we risk 1 to get minimum 10.
Yeah. No, I know. Well, like the UJ, man, UJ just taking it up to 500. The 500 level would give me a 1 to 10. So, and I'd be happy with that. I mean, I might take partials if I get up in the morning and we're not there yet. I'll take partials at it and then just hold it as high. You know, I might hedge the going all the way up to a UTAG. But yeah, I'll be happy with that since CJ was a pain. CJ was being a pain, man. CJ's right back at our entry too.
CJ. And I was CJ's dancing. Look at 4 hour. Just shenanigans. Like this price action. This isn't tradable price action.
No.
Like there's nothing to do in here. CJ needs to make up its